Stumble into something smart. Woke up. It's a great day. Amen, Jeffrey Dean. I believe that 100%. Good morning, Nanda. Nice to see you as well. Guys, it's Friday, October 23rd. And we're checking news before we do anything. We got to make sure that we know when the crazy stuff may happen, guys. And today at 8:30, we did have some medium impact news. In the words of Ron C., it was a dud ski. It didn't move the market. It didn't make it spike and jump and bump, but it had the potential to. And as long as that potential is there, it's a pretty good idea. Maybe sit on the sidelines, wait it out, see what happens. At 10 a.m., we have more news. Today is the 25th. What did I say? Did I say the 24th? Man, I don't even know, Joel. Should be purple. 10 a.m. Revised University of Michigan Consumer Sentiment. I have no idea what they're talking about, but I do know that it has the potential to stop the market. So it has the potential to change the market direction. It has the potential to cause a spike. So I choose not to trade into news, guys. It's just one of the advantages that I give myself. Everything that I talk about today, you're going to be able to find on the Nexgen page. The Nexgen page is where all the answers are. At least I'm good at what I do. So are you, Joel. So are you. Man, we all have good days and bad days. Give me a Y if you can hear me, guys. No? Okay. Hold on. One sec. Dag nabbit. Sorry, YouTubers. We're going to do a full kill. Alright, that's everything off. Bring it back up. Go to the education room. Start the stage. We're going to try again. I'm going to pop it out. I'm going to get the chat box up. I'm going to share my screen. And boom. You guys got me now? Awesome. Sorry about that. Man, I hope everybody shows back up. Fingers crossed. I don't know what it is. I really think that there is a tremendous amount of load on Discord at 9 a.m. Eastern. And it messes stuff up every now and then. But that's okay. Because if this is as bad as it gets, guys, it's a pretty good day. So we'll give everyone a second to come back in. Everyone's like, what happened? I lost him. So you're in, Jeffrey. Well, then I'm good. As long as Jeffrey's here, I'm solid. Guys, everything is on the Nexgen page. I'm going to go to the software user guide because we're recording this. People will check it out. Guys, this is all the NinjaTrader how-tos, starting with the best practices. One of the things that unfortunately is the truth about NinjaTrader is that when, excuse me, is that NinjaTrader sometimes, whoops, here we go. Sometimes NinjaTrader crashes, guys. It's just a part of it. It happens. But this gives you great stuff about how to reduce the amount of crashes. And then we have opening, building new charts, muting the chat room, screen capture programs, guys. All the stuff, all the NinjaTrader how-tos are right there. Go study it this weekend if you need a little help with NinjaTrader, if you're still working on it. I love it. Resetting your simulator. Sometimes we need to do that just for the mental break, right? I had a great day. Let me reset, see if I can redo it. I had a horrible morning. I learned a lot of lessons. Let me get that negative number off there. Focus on my confidence building, and let's get back into the market, guys. So all of this stuff is here. If you have any questions about NinjaTrader during class hours, guys, put them in. Drop them in the room. I'll answer everything I know how to answer. The second one is the trading guide. And the trading guide is where all the answers come from. The trading guide is where we talk about the rules. This is where I get the rules from. This is where I find pictures of termination conditions. This is where I can find the entry for the highest probability trend trade. Everything that I've built to teach you guys from really comes from this page. And I'm going to go to the glossary of common terms. There it is right there. Frequently asked questions, glossary of common terms. And I'm going to scroll down and we're going to go to the high probability trade, guys. Repetition. Repetition, repetition, repetition. I'm going to say repetition repetitiously. Guys, repetition is the key to recognition. Repetition is how things become apparent. Repetition is how you get good at this. Doing the same darn thing over and over and over until it becomes easy. So in this classroom, I give you the rules for the high probability trend trade first. And your job is to repeat it until it becomes easy. Because a high probability trend trade, guys, this is a trade when each indicator on every chart agrees for the trade. This is the best of the best, guys. Triggers are the strongest. No termination conditions exist. There's no trouble spots between your entry and your target. And I'm telling you, once you have this look, once you understand this look, it's crazy how much stuff you'll see. It's amazing how many opportunities you'll find in the market. So we focus on this one because it really does a couple things for you. One thing is this is a trade that typically wins 70 to 80% of the time. This is a trade that creates a lot of confidence through the memory of success. This is a trade, most importantly, and I say this without hesitation, guys, the most important thing that you're going to get out of this trade is learning to read your indicators, is being able to look at your charts and understanding a couple advantages and then turning those advantages into trades, guys. And when you do this, when you start learning to read your charts, you're going to understand things. Really? Lost again? No sound? Rats. Man. Okay, hold on. Joel's good. You guys aren't. So I'm going to do this one. I'm going to do not the full kill, just a little kill on this. And we'll see if that helps. Some of you can hear me, some of you can't. Some of you, when I do this, you're going to hear me talking from the great beyond, even though my charts aren't up. So fingers crossed, once again, we can get a little something something going where you guys can hear me. Did that bring us back? Yeah, Joel's got me. Did the rest of you get me? Give me a Y. Anyone? Joel, you seem to be the one. You are the chosen this morning. Red eye's good. Okay. Let me type this out. Wayne, Zorro, Adriana, Nanda, can you guys hear me? All right, we're going to try it again. We're going to give it another go. I'm going to do full kill. Boom. Gone. Out. And then going to come through. We're going to go to my task manager. Going to obliterate Discord. Make sure that there's not a Discord running in the background. YouTube people, see, you don't have to worry about this stuff. But I gotta teach a class, right? Gotta teach a class. Gotta see what happens here. There's the education room again. We're gonna start the stage. We're gonna call this one Third Time's the Charm. I'm going to share my screen. And my microphone is on. My fingers are crossed, and I am hopeful that we're working. Rob says yes. I like that. Jeffrey's in. Gus is good. All right, cool. Man, it's Friday. Doesn't Discord know that it's Friday? We shouldn't have struggles on Friday. It's all right, guys. So let's become chart readers. I saw a shooting star last night, and I did the whole I'm going to wish on a star. And guys, what I wished for is that you guys would become chart readers. Jeffrey is not related to Mark. My wish was that you guys would be able to look at your charts and be able to find some advantages. And one of the things about being a chart reader, guys, is you'll find that that's 90% of your day. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is waiting for advantages. Guys, 10% of your day, that's trading. That's taking these advantages and trading. So we're going to focus heavily on chart reading. I'm going to say the same thing I said yesterday. And to be honest with you, I'm going to say the same thing that I'm going to say for the next year, guys. We're going to talk about this highest probability trend trade. We're going to focus on the advantages. And once you get good at it, and I'm telling you, give yourself like a week or two. Give yourself a little bit of grace. You're new. You will understand where the market is likely to continue. This becomes your entry for the highest probability trend trade. You are going to understand where the market is likely to go. This becomes targets for you. And you're going to understand where the market is likely to stop. And guys, this becomes the biggest red flag you have ever seen waving. And it tells you don't take that next trade. These are what we call termination conditions. So this is our whole focus. I'm telling you, for like an hour, hour and a half, whatever it takes. Guys, we're going to talk about only 3 rules. Only 3 rules. Each rule gives an advantage. So a trade is like this equation, right? I stunk at algebra. But a trade equals momentum plus a clear path plus an entry area. Momentum comes from rule number 1, having strong triggers. This is an advantage I care to never do without. A clear path comes when there's none of those termination conditions, none of those likely to stop areas. Guys, these likely to stop areas can ruin all of your forward progress. There's no room to your profit targets, guys. Once you understand momentum, once you understand a clear path, all the doors open. We talk about the high probability trend trade first because you need to be able to read your indicators. And the one thing that I'm going to encourage you to do is talk out loud when you're sitting in front of your computer. I want you to use these words, momentum, clear path. I want you to ask yourself if you have them. And even more importantly, I want you to answer yourself honestly if you don't. And it doesn't mean that maybe there isn't a trade later down the line, but what it does mean is that you know what you're up against if you are going to take a trade. If you are void of momentum, you know that there may be larger retracements. If you're trading into a termination condition, you know that it can bounce and stop you out right from that key area, guys. And if you're not defining your entry area, you're probably creating more risk than is necessary for the trade. So start talking to yourself about advantages, and all you super smart people, don't try to make my 3 rules difficult. Let them be easy, let them be simple, let them be very black and white in the beginning. These 3 rules happen on 2 charts. There is a large chart and a small chart, guys. There is the large chart, which is a slow moving chart, and we use the first bar on the large chart to define the direction of the market, to define the momentum in the market, and to define the areas that may or may not be problematic. On our small chart, we're going to define our entry. We're going to use that 3rd rule to pinpoint exactly where the market is most likely to continue with the trend, guys. Your first 2 rules, your first 2 advantages are large chart rules. Momentum and a clear path. Your 3rd rule is on this refinement chart. This slow chart, refinement chart. Broad stroke, Small, tiny. Inside of this one bar that gives you all of this amazing information, guys, there's 20 to 30 bars on a small chart. We use that refinement to pinpoint entries and to reduce risk. And the reason that gets done is because the large chart are the people that are more powerful, better looking, have more money. These are the people that create trends. These are the people that create the momentum that we look for. These are the people that react to the areas on our large chart and tell us exactly where they're likely to make decisions. Guys, the large chart has got to lead the way. The path of least resistance is simply go with the flow. Don't fight the large chart. The small chart is this small crowd that loves to fight things. And when the small crowd fights, they fail 70 to 80% of the time. And guys, their failure point is very predictable. That's what rule number 3 does for you. This is where you're actually going to enter the market. When everything says up and there's nothing in the way, you're going to let a small crowd fight, pinpoint exactly where they're most likely to fight, and your precision is going to be so high that you're actually going to use a limit order and just wait for them to fail right at this key area. So we use 3 rules in 2 charts. Simple. If you're not winning more than you're losing, if you're not finding success every day, guys, this is an outstanding way to get your brain right. So I spend the first hour of every day helping you guys learn the trigger line and the Fibonacci looks for when it's okay to trade. Notice that it says for when it's okay to trade. I think that's a powerful phrase, guys, because the reality is there's going to be 2 scenarios that always enter your life when it's time to trade. Either your rules are going to be met and you're going to be obligated to take that trade because it's your trading plan, or your rules are not going to be met, at which point it's not okay to trade for the brand new user because you're sacrificing the great things that bring a heightened success. I want you guys to simulate, practice. So often I hear people saying, well, I want to get good at this before I try it. No, you're going to spend the rest of your life getting good at this. You are going to learn something new every day, guys. So what you have to do is you have to go practice. When you're learning something new, the more pictures you take, the more times you write on a chart, guys, the quicker you're going to get to where you want to be. And that's going to be even faster if you follow the first step in becoming a confident trader, guys. Everything you see, post in the room. Write on your chart. Tell me what you see. Talk about your advantages. Because every time you post a chart in this room, ladies and gentlemen, it's a private session with me. I'm going to look at your chart. I'm going to talk about what I see. You're going to show me a chart. You're going to talk about what you see, and we're going to work together to become a better trader. We both have the middle Dean. No, so, oh, that's Mark Dean. Yeah, no, they both have the Dean. I don't know if Mark Dean had long hair in the 80s. He might have. He might have. I had a mohawk back then. I was cooler than you headbangers. Guys, we're going to simulate, practice, post in the room, get feedback every day. Every time you post in the room, I'm going to talk about what I see, what you see, how we do it better, all that good stuff. The goal is that you work your way to always having the correct rules, because every time your rules are met, you have a statistical advantage. Rules are based on patterns that have been proven to win more than they lose. And your goal should be that you never practice the wrong trades, guys. You're going to break rules inadvertently, and that's okay. That's the learning lesson. But you should never say, I am completely void of advantages. Let me jump in and hope things work out. You're actually creating a little bit of muscle memory that's very detrimental in the long run. We will simplify today. We're going to talk about a high probability trend trade until we are blue in the face. We're going to break down each rule individually. I'm going to teach you how to study it, and we're going to piece them together to create this trade that typically wins 70 to 80% of the time. You've got to know what looks you're going to commit to. You've got to be able to see this pattern visually, to be able to spell it out, what those advantages mean to you, so that you can always find the correct entry. And you've got to learn them until they become easy. That's the second piece of the puzzle, guys, using the spreadsheet that Nexgen gives you. Using the spreadsheet that I give you every day. And guys, I change this thing up. I add things to it, so I do drop it in the room every day. It's cool to grab it, save it over the old one. Your first tab on the spreadsheet is the trade journal. That's all it is. This is what I did. Here's my advantages. This is what happened. And then I think this becomes one of the most important parts. What was my feedback from class? Has anyone in this room ever taken a trade that lost and you were so mad about it? And then you posted it in the room and I'm like, dude, you had every advantage. This is a trade that typically wins 70 to 80% of the time. This is just a cost of doing business. And then suddenly you're like, whoa, I'm not frustrated anymore. I'm actually following my rules. This is amazing. I feel great because of a loser. Guys, that's where the feedback comes from. Just making sure that you're reading your charts right, that you're getting those entries. But you've got to go back to this page and you've got to study it every morning. You've got to say what worked, what didn't work, what felt easy, what felt forced, guys. And if you do this, you're going to recognize patterns that are bringing you success in the market. You're also going to begin to recognize patterns that are robbing you of that success, trading in determination conditions, hoping areas break rather than waiting for them to break. And guys, this little study each morning, it prepares you for the day because not only are you focused on finding the best of the best for the day, but you're also accelerating the learning. And when you drop your trades in the room, guys, the same way you're going to begin to recognize patterns in the market, I recognize patterns in you. And this is what I'm good at. I'm going to look at your pictures, and within 4 or 5 pictures, I'm going to know exactly what your challenge is. Maybe your challenge, and I'm going to look at names, I'm going to start calling out challenges. Maybe your challenge is not trusting the entry, and you get in a little late, and you sacrifice profit and increase risk. Maybe your challenge is trading directly in determination conditions because you're not going through the process of sounding out what it takes to avoid them. Maybe you're fighting triggers and you need to be a little more patient. Maybe you're exiting the perfect trades too soon because you haven't built the trust, guys. So we're going to work together, and once I recognize your patterns, we're going to develop a fix, and we're going to talk about how to fix it, and we're going to keep going back and forth. And it's almost annoying how in your head I'm going to get if you just give me the opportunity to see what you're doing. The next one is how we recognize these looks quickly, how we commit them to memory, how we make sure that we never trade against advantages, and how we always make sure that we're trading with advantages. This is the 101 tab. I'm going to give you a handout that teaches you how to use this tab to study, and all this is pictures of rules being met and rules not being met so that we can commit them to memory. The client trades is the exact same thing, but this pieces together the 3 parts in most cases. Odds favorable momentum, clear path, entry area, almost 400 pictures of you guys being brilliant, so brilliant that I stole them from you. There is the entry sequence for the long and short trade using the high probability trend trade scenario. There's a very mechanical beginner's management plan that's focused on the least amount of risk and the quickest path to payment. Then there's options for beginning to hold more trades, longer trades. Once you understand momentum and a clear path, you're going to see patterns all the time, patterns over and over. Oh my gosh, this keeps happening, and when it happens, I lose money. So you'll begin to recognize those patterns, and it probably becomes part of your management plan. But you're also going to say, man, I keep seeing this pattern, and this creates an opportunity that wins more than it loses. I'm going to develop my trading plan. I'm going to start to study and ultimately trade this pattern, guys. And that's what the final section is here, the favorite looks. You're going to have personal trade setups, guys, and yours are going to be different than other people's. You're going to take your setups, and they're going to make you feel great, and you're going to feel confident. You're going to believe in them. Doesn't matter what anyone else is doing. Nobody else in this room is paying your bills, so focus on your trades. You're going to learn to manage them. You're going to start to see patterns. Guys, there's a whole section on termination conditions because that is the most broken rule. But the goal, once again, learn the looks, practice them, get feedback on everything that you do, guys. And this is the magic of what Nexgen does. 15 hours live every day. You're going to get feedback to tell you what you did right, what you did wrong, and how to fix any challenges that you're having. The only way that part of the equation works is if you talk to me via pictures. We're going to simplify. We're going to talk about the high probability trend trade. That's going to take you to what we call a medium probability trend trade and then open the doors for the rest of the trades. Guys, your high probability trend trade is your first trade. This is not your only trade. This is the one that teaches you to read your charts, guys. So what we're looking at is momentum, a clear path, and an entry area. Let's define them. Let's recognize them. Let's get good at them. And let's get to the next step in our journey. But it all starts on the large chart, and it starts with large triggers. You guys ready to get going? Let's get going. I'm so excited. Large chart defines direction. Unless you're colorblind, this is the easiest lesson that you'll ever get, guys. Green means up, red means down. So if the background is green on my large chart, I'm looking for rules to be met for high probability trend trades long. If the background on my large chart is red, I'm looking for rules to be met for high probability trend trade short. If you're colorblind, check this out. If my small triggers break above my large triggers, it's going to paint the background green. If my small triggers break below the large triggers, it's going to paint my background red. And guys, this is how we identify strong triggers. When my small triggers break away from and above my large triggers, which are wide, this gap in between, you need to get some of my coffee. This gap in between lets me know that the odds are favorable for the market to continue up. Separation is strength. Picture scissors open, guys. This is the best of the best. And when I see this gap between the two, when my background is green, when my small are green, when my large are green, guys, this market is likely to continue in the direction of the trend. This is what we call odds favorable momentum, and we talk about it every day in this room. In a downtrend, my small triggers have to be below the large triggers because that's what creates the downtrend. And then the separation is strength. When the small are below the large, when the large are wide, guys, the odds are favorable for the market to continue down. Odds favorable momentum. OFM, you'll see it on charts all day long. When I have this look, the market is likely to continue in the direction of the trend. When I have this look, key areas have the potential to break. And when I have this look, guys, this is going to cover some of the mistakes that I make as a new user. Hell, this covers some of the mistakes that I make as an experienced user. Odds favorable momentum leads the way. Open scissors, pushing down. And guys, this is the best of the best. This is rule number one being met. And when those small triggers return to the large triggers, when those scissors close, this is a weakness. This is a visual that, hey, my trend is slowing, my advantage is gone, and when I have these weak triggers, anything can happen up or down. So do I want odds favorable to continue, or do I want anything can happen? Do I want strong, or do I want weak? Guys, only you can answer that question for yourself. But it's really not a difficult lesson. Let's find a couple different examples. Man, look at that consolidation. Rule number 2. Guys, when the small triggers are below the large triggers, when the large triggers are wide, the market is likely to continue down. And it did right until they weakened. And then we got a huge retracement. And then we get separation and strength. And it keeps going up. And then they begin to weaken. And we get a giant retracement. And guys, this is the one I don't want to do without. There's people in this room that have plans based solely on momentum. And they're pretty solid plans. So, rule number 1, is everybody cool with that? That's the easy lesson, guys. We're about to get into trigonometry, calculus, crazy, oh my gosh, difficulty stuff. Not really. Next rule is pretty easy too, guys. Once I have momentum, I want to make sure I have room in my target. My goal is to get paid every day. My goal has nothing to do with showing off or being in every move. I want to get in with momentum with nothing in the way, and I want to get paid. So I'm not going to trade into a termination condition. What's a termination condition, Mark? Well, let's spend some time in the instruction manual. A termination condition is nothing more than a Fibonacci-based indicator that may reverse the market. And guys, I'm going to use a comparison of the T3 trigger lines, the same lines that create momentum, and that area to decide whether or not it's problematic. So the areas that I'm looking for, horizontal lines on a large chart, how easy is that? The first two are going to be the divergence lines. Divergence highs, which is a magenta line. Magenta is a fancy way of saying pink. This magenta line prints whenever there's a loss of momentum at a pivot, guys. So if the market goes up and down, that creates a pivot. If your momentum didn't follow price, you're going to see this negative number in this pink line. All it is a loss of momentum. That's it. But later on down the road, decisions might be made at this line. Same thing here. Down, up, loss of momentum, negative number, cyan line, which is a fancy way of saying light blue. Guys, this line in itself is just a loss of momentum. But later down the road, if price reaches that, decisions might be made. We're going to go through a recipe to know whether or not it's detrimental. We're going to use Fibonacci resistance, the red lines. Red's a pretty easy color. When the market's trending up, guys, this is the point where the market may stop, bounce, or reverse completely. The blue lines, the Fibonacci support, when the market is trending down, this is a point where the market may stop, bounce, or reverse completely. And guys, these yellow 1-to-1s are fibs in the moment. Fibs in the moment. They take instant reads and create this area that may behave as support if the market's trending up, may be resistance if the market's trending down. Guys, these lines are where decisions are made. The market just opened, the ES just spiked, didn't it? These are where the large crowd might be making decisions. These are where buyers and sellers may fight. These are where I don't want to be in the middle of their decision-making process. So the first thing I do is I let my buyers or sellers get to that key area. So if the buyers are in control, the market's going up, the background is green, my triggers are green, everything is great, and then I hit this red Fibonacci resistance, or it may be a magenta divergence high, or it could be yellow 1-to-1s. But once I reach resistance, the only thing I have to do is ask myself, where are my triggers? That's a pretty simple recipe, guys. Price reaches the area, decisions are set off, where are my triggers? Well, if my triggers remain below, that line's a termination condition. It may reverse the market, guys. It may create an untradeable bounce. Hell, it might even give you this full reversal that says, guess what? It's a strong top. May stop it, may create a bounce, may reverse it completely. I'll never know. I'll never know what's going to happen, guys. They don't tell me. Nobody sends out a memo. Hey, Mark, guess what? When we reach resistance, we're going to stop and go the other way. So what I do is I say, well, we reached it. Where are my triggers? They're below. I choose not to trade. Rule number 2 is not met. If it reverses, strong top, guys. Precursor for the highest probability trend trade you can take. And if that market's going down off resistance, momentum is screaming, it starts to slow, and then dag nabbit, it hits a blue line, all I have to do is ask myself, where are my triggers? And if they're all above that blue line, I choose not to trade into that area. This area is a termination condition, guys. This area may stop the market. This area may create an untradeable bounce. This area may reverse it completely. If it reverses it completely, this is what we call a strong bottom. And guys, check it out. There is a divergence high. There's a magenta line on its own. It's nothing more than a loss of momentum. When price reaches it, now it's a termination condition with the triggers below. And look how the market reversed. Even sometimes they retrace. Price reaches support, triggers are above, no short trades into that area. Let's see if there's resistance all the way back to support. Loss of momentum pushes all the way back to support. Right to the divergence high, absolutely no room. Right to support, support for the bounce. Guys, over and over and over. This is exactly what happens each and every day. Your job is to not trade into areas, but rather trade to areas. I'm going to circle this tail because dollars to donuts. This was an opportunity to make a little money this morning. We'll go back and take a look at it when we talk about entries. So can you guys give me a why? Price reaches an area, triggers don't break. Let's sit on our hands for a second. There's no reason to trade into these areas. Rules come to be because what happens is, and let me just do this because you guys understand percentages, right? This area holds more than it breaks. This area holds more than it breaks. So if I trade into the area and the triggers are below, above, I'm choosing to enter the market with a decreased likelihood, is that a good word? Of success. Because this pattern says, I don't know what the exact number is, but let's say 60% of the time it works every time. Which means there's only going to be about 4 out of 10 where it actually breaks, which means I'm going to take more losers and winners. And guys, this is exactly how rules come to be. It's just patterns that repeat themselves that we can define, win more than they lose. Areas break all the time. All day long, areas are going to break. Support is going to break and it's going to become resistance. Resistance is going to break and it's going to become support, guys. When is it broken? When the small triggers and the large triggers get below resistance, or support, support is broken. The path is clear. Everything is down. Life is good. When small and large triggers get above resistance, resistance is broken. It behaves as support. The path is clear. And guys, this clear path means that you're going to have room to your targets. This clear path means that there's nothing in your way to create a bounce, and this path will remain clear until you reach the next area. And these are your two options as a brand new user. You either have a termination condition because the triggers haven't broken, or you have a clear path because both small and large have gotten below. Everybody with me so far? We're keeping it simple, right? Focusing on how to know when the rules are met. This is the high probability scenario. Your ability to read your charts takes you to the next level, to the second trade. And simple is awesome, without a doubt. Guys, momentum can break areas. Rule number 1 being met can break areas. Your trigger lines are going to show you that potential to break. We know that if price reaches and the triggers stay above, sit on your hands. Well, something has to happen on their way to the other side, and this is what it is, guys. This is when we're using that momentum and it gives us the potential for areas to break. And what happens is we call this the 50-50 look. When your small triggers absolutely smash through an area, guys, write it down on a piece of paper in Sharpie. Absolutely smash through an area. But your large triggers are lagging behind. 50% of your triggers are through the area. We are halfway to a clear path. 50% or not, I'm halfway to a termination condition. With odds favorable momentum, ladies and gentlemen, this area has the potential to break. You can take an entry based on that potential to break. But rule number 2 isn't met, which means that I don't have a clear path, which means this isn't a high probability scenario. It's what we call a medium probability scenario, which means most of my indicators line up. I have momentum. I might even have the best area ever, but my path isn't clear yet, which means that I may need to manage a little more aggressively. It means that I may need to take profits at that trouble spot to protect myself, because this probably isn't a home run every time. Guys, the majority of your trades will be this 50-50 look. Let the small triggers smash. There will be times, promise you, pinky swear, there will be times when your path isn't clear because the areas are stacked a bit. It may be 3 supports in a row, it may be 3 resistances in a row, guys. This is 90% of your day. 90% of your day is sitting on your hands not doing a darn thing. 90% of your day is reading indicators. 10% of your day is trading once that's done. But guys, this is okay. It's okay to do nothing. I'd write that down on a piece of paper too. I don't have to be in every move. My goal is to be in the best moves. Futures markets trade billions of dollars every day. Billions of dollars are exchanged every day in the futures market, guys. You have to make $400 a day to be in a 6-figure income. That's it. So $400 a day, that's $400 easily in between the areas. So don't feel like you have to be in every move. Don't feel like every dollar is your dollar. Don't feel like you have to be the first one in or the last one out, guys. Base hits pay bills. Rule number 2 gives you the ability to see where the driving forces are likely to make decisions. That's what Fibonacci does for you, guys. That's one of the reasons Nexgen's been around for 28 years. Very often, Rule 2 is going to keep you out of consolidation. It's going to keep you out of chop, guys, and 90% of your day is waiting for those advantages, waiting to break out of that consolidation area. And then once it happens and you have that momentum and the path is clear, guys, we're going to capitalize. We're going to find ours. So everybody is on board with me here, right? If I hit resistance, it may create an untradeable bounce. If I hit these these yellow 1-to-1s, it may create an untradeable bounce. If I break resistance, I've got a clear path to the next line. And if that next line breaks, oh my gosh. I'm going to try not to swear today. To the freaking tick, it behaved as support. Guys, if you study this for a week or two, if you wake up every morning and you say, you know what? I'm just going to spend 10 minutes learning to trust the idea that I don't have to trade into a line. I'm going to take 10 minutes taking pictures of termination conditions, watching rule number 2, define consolidation. I'm going to take pictures of untradeable bounces. I'm going to take pictures of resistance becoming support. Guys, you have the keys to the kingdom right now. You have the keys to the kingdom. You know exactly where the large crowd is likely to react. It's awesome. I get excited about fibs. I really do. It's kind of silly. I love Fibonacci because it works and it keeps me safe. And once I have momentum, once you have momentum, let's put this on you, not me. Once you have a clear path, ladies and gentlemen, let's find an entry. Let's pinpoint on a smaller, faster chart exactly where the large crowd is most likely to continue, where the small crowd is most likely to fail. Let's pinpoint our entry, guys. So I have momentum, my path is clear, I go to the small chart, and holy smokes, I get 3 divergences in the same price range. 3 divergences, 3 losses of momentum in the same price range on a smaller, faster chart. Guys, the smaller, faster chart will show you change that you can't see on the large chart. All of this action probably happened inside of 1 bar on the large chart. 3 divergences, 3 losses of momentum may terminate the trend, guys, and it becomes very powerful when the 3rd divergence happens with the small triggers inside of the large triggers. When I see 3 losses of momentum and my triggers tell me anything can happen up or down, guys, no more short trades. This is the only time 3 divergences at a low or a high where rule number 2 isn't met, where my path isn't clear, guys. And this is just going to tell you, hey, pump the brakes, things are changing. Pump the brakes, be patient. It may push against you a little bit, guys. But the reality is that doesn't happen a whole lot. Usually, we're going to look for our entry, and it's going to be just what we need. And you're going to be so precise with your entry that you're going to use a limit order. You're going to wait for the market to come to you. And that limit order is going to be waiting at an area. You're going to buy or sell that little pullback, and it's going to be right at an area. Fibs, mid-bands, and yellow 1-to-1s. And guys, here's the strength of the entry rule. That area is going to be inside of triggers. And more specifically, inside of what we call favorable large triggers. Did any of my S&P traders catch that HVA trade right off of support with all the triggers above it? I hope so. If not, we're going to go talk about this one. That's a trade that you'll get a little later down the line. But I see my range chart out of my right eye. Guys, we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Why do I use the phrase favorable large triggers? Because favorable large triggers give you the highest chance of success. Favorable large triggers give you the smallest range where the market is most likely to continue, where the small crowd is most likely to fail. Favorable large triggers means that your large triggers, the smooth large triggers, easy to recognize, look just like the ones on the large chart, are trending up. And then on your small chart, you should have 2 sets of large triggers. You have the large triggers from the small chart, and then we've taken the large triggers from the large chart and we've put them onto your small chart. And we do that because price returns to triggers. This is one of my favorite lessons, and guys, I'm embarrassed at how long it took me to learn it. Price returns to triggers. I don't care what chart you're looking at. I don't care whether it's a big chart or a little chart. Price typically pulls back to trigger lines. If it pulls away from them, it pulls back to them. If it pulls away from them, it pulls back to them. This is the large chart. Does the same thing on the small chart. So we've put both sets of triggers on the small chart. And when they overlap one on top of the other, guys, I have one correction point. And when I put areas inside of that correction point, I've got the recipe for the perfect entry. So when you look at your small chart, I want you to say out loud, this is going to help in management. Small chart price may return back to the large triggers. Large chart price may return back to the large triggers. Guys, I know exactly where the market may return, from the top of the trigger lines to the bottom of the trigger lines. And then I have to say that it's likely to bounce at an area. Fibs, mid bands, or yellow 1-to-1s. So these areas inside of favorable large triggers, guys, create a window. And this is where the small crowd's most likely to fail. And this is where your entries are going to come, from the areas inside of favorable large triggers. And you're going to get so precise that you're going to wait for it with a limit order. So when the large chart says up, we're going to go up with it. When the large chart establishes momentum through rule number 1, we're going to make sure there's nothing in the way. And if the large chart says, hey, there's no areas to create a bounce, there's no areas where the large crowd is likely to react, nothing in the way to stop your good time, we're going to turn our attention to the smaller, faster chart, guys. For the brand new user, the distance from like here to here, when everything is screaming up, is going to gnaw at your gut. And you're going to say to yourself, the market's going without me. How am I ever going to get paid? This is horrible. Nexgen stinks. Mark's a sham, right? And then the small crowd fights. You get this reversal bar. And this reversal bar signals the beginning of the feed of the pullback, of the retracement, that tends to happen more often than not. This reversal bar is not your entry. This reversal bar is a loss of momentum. A close on the other side of the triggers is a loss of momentum. So if you're one of those jump-in traders, guys, this is an awesome management exit. Just saying. Once I get the reversal bar, I'm going to identify my areas inside of favorable large triggers. And I'm going to look not only at the triggers, but for the areas, guys. Price may return to the triggers. It may bounce off of areas. I'm going to create what I call a window of opportunity. From the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers, this box represents the point where the small crowd is most likely to fail, where the trend is most likely to continue with a large chart. You're going to activate a limit order a couple ticks above that area, and you're going to say to yourself, I've done everything I can do at this point. I've assured myself momentum. I made sure that there wasn't anything in my way, and I just bought an area inside of favorable large triggers, guys, and that is the only things that you will ever be in control of. Futures markets. We can buy them, we can sell them, we can make money both directions. Look at that. Whew. To the tick. Just saying. That's it. Had to go back and show you guys that. Everything says down, the path is clear, the momentum is strong, and you guys wait for the reversal bar because you know that the reversal bar is a loss of momentum and it signals the beginning of the pullback. Once you get that reversal bar, you say price is likely to return to the large triggers on both charts. So I'm going to make sure they're one on top of the other, and then I know that a line inside of those triggers is likely to create a bounce in the direction of the trend. Therefore, my window of opportunity, the point where the market is most likely to continue, is this mid-band inside of favorable large triggers. Your job is to activate a limit order a couple ticks below it and to say to yourself, this is my entry, my advantages are there, this trade wins 70 to 80% of the time. I'm obligated to take this trade at this point because my rules are met. And guys, this is your high probability trend trade. This is the trade that typically wins 70 to 80% of the time. This is the trade that creates confidence through the memory of success. This is the trade that you can go study by circling tails when you have momentum and a clear path. And guys, I didn't have an area inside of favorable large triggers. This isn't the perfect entry. That one was, though. And then it turned into this one. Kind of cool. So you can go back and study this. When your rules are met on the large chart, and that's not the perfect look, that one probably had the potential to break in the heat of the moment. You can scroll back on a small chart, and what you'll begin to recognize is that these areas inside of favorable large triggers create an amazing advantage. And the great thing is, Once you guys can identify the area where the market is most likely to continue, you can use the exact same language and pinpoint where the market shouldn't go if this is going to be a winner, guys. And the market should not go 4 to 5 ticks beyond those trigger lines. Those trigger lines are where the market is most likely to return. The areas inside are where it's most likely to continue, guys. In any line, 4 to 5 ticks, anything beyond those trigger lines, we're going to call it the wrong side of the trigger lines. Anything above the trigger lines for a short is the wrong side of the trigger lines. Anything below the trigger lines for a long is the wrong side of the trigger lines. Your ability to pinpoint where the market is most likely to continue gives you the ability to understand where it shouldn't go. This is your first stop placement. 4 to 5 ticks above that trigger line. This is the start of management. All right. Guys, we're going to have a somber moment here. Your stop will get hit. Small crowd's going to push right through, and they're going to hit you. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. You have to be willing to accept losses. I'm teaching a buddy of mine to trade right now, and I asked him yesterday, I said, did you take that trade? And he said, no, I want to make sure that my first trade is a winner. And I said, hey, you never get to guarantee that it's a winner. You never know what's going to happen in the market, guys. You never know if it's going to go up, if it's going to go down. You don't know if you're going to win, if you're going to lose. But what you can be sure of is that the high probability trend trade is a pattern that wins more than it loses. It's a pattern that has you defining the point that gives you the least amount of risk and the highest chance of success. And guys, you've got to be willing to accept losses. They are a cost of doing business. But when I have all those advantages and I take the perfect entry, I'm more likely to get what we call a confirmation bar, a reversal bar in the direction of my trade. Once I get that, I'm going to reduce my risk 2 ticks above it, guys. I'm going to reduce my risk 2 ticks below it. Doesn't guarantee a winner, but what it does is it minimizes my risk. So even if this is a loser, it's a smaller loser. And that feels good. So this is the high probability trend trade. And guys, I'm not only the Hair Club for Men president, I'm also a member. Let me show you. Oh my gosh, I take so many pictures. I take so many pictures. I was bored last night. My wife's out of town. And I was like, you know what? I'm going to watch gold. And on gold, I noticed a couple things. I had a strong top. I had termination conditions that reversed the market. I also had 3 divergences in the same price range, right at a key Fibonacci area. How's that for the motherlode? That termination gave me odds favorable momentum. That termination gave me a clear path. I got everything below the fibs. And guys, I said to myself, and I want you to see this like a freaking sniper. I entered just below the fib, inside of favorable large triggers. And I said to myself, with a trade like this, I've got a better chance, I've got a better chance of winning than losing. And then, this is the whole entry. Large chart said go. So I made some quick money because I believe in getting paid. And then I made even more money at the area that may have stopped the market. And because my large chart said, guess what, Mark? Everything is screaming down and there's absolutely nothing in the way. I put my final targets right at the next area. And guys, you will never believe what took me out of this trade. 3 divergences in the middle of nowhere. That third divergence printed and I exited the trade. And then the market rocketed up. What a great savior. So, guys, not only do I teach it every day, not only do I talk about it every day, I trade it every day when it sets up. Because this is the best of the best. But it's not always the best of the best, guys. This is your easiest look. This is the best look. This is the one where when you take these trades, you're like, holy crap, life is easy. But this isn't always the look, guys. Favorable large triggers is not always the look. When my rules are met on the large chart, when I've got momentum, when I've got a clear path, sometime I'm going to go to my small chart, and the large and synthetics are separated. They're not on top of one another. There's distance between the two. And you guys remember, because I say it every darn day, price may return to the large triggers on both charts. It may go to the large or the synthetic. I don't know. I'll never know. I want to know, but I don't. But I've got that pattern in place that I know I've got a big area where price may return. I know that I've got multiple areas where it may bounce. And the crazy thing is, before I ever enter a trade, I know exactly where my stop goes. And I don't feel good about $400 worth of risk. Hey, good morning, Steve Diego. Those had to be really early errands because you're in California. Guys, it might go from a mid-band. It could go from a fib. It could go from these triggers. It could go from those triggers. But no matter what, my stop goes below the triggers 4 or 5 ticks. Can you guys give me a Y in the room if you're with me on this? Because what you're about to get is the ability to not get run over all the time. If I say to myself, my entry isn't perfect, my risk is too high, I'm uncomfortable with this, guys, I can wait for that confirmation bar. I can wait for that bar that says, hey, you know what? Now we're going in the direction of the trend. Now we're going in the direction of the momentum. Now we're going in the direction of that clear path. Sorry about the indecision, Novak. Let's give you something to put your stop behind. And I'm telling you right now, when my entry isn't perfect, a little confirmation goes a long way. When my entry isn't perfect, guys, I insist on a little confirmation because the reality is my money's worth it. This was this morning, and I was telling people, I put my read in the room. I was like, oh, here comes crude oil. Here comes crude oil. And I said, well, here's my read. And guys, I'm going to give you my read because chart reading is what it's all about. And I'm just stealing this. I posted this in the other room this morning. I was feeling very scholastic. Folks in the room were like, here comes the trade. Here comes the setup. And I was like, well, let me give you my chart read real quick. My chart read was that these triggers are weak. And weak triggers aren't strong triggers, and weak triggers don't necessarily push the market in the direction of the trend, but everything says up, and my path is clearing, but this weakness, because I speak to myself in terms of advantages, I literally say with weak triggers, I'm uncertain of retracement levels. I don't know if it's going to be a fib, I don't know if it's going to be this mid-band, I don't know where it's going to go. And then once I get to the wrong side of the triggers, I'll need a confirmation bar per my plan. And guys, I said this right in the room. Adriana, have a wonderful, wonderful weekend. And this is exactly how that trade set up. Your large chart said that we were most likely to go up. Your large chart even defined where the market had the potential to hold. And guys, all I had to do was wait for confirmation on my small chart, put my stop behind it, and this was a beautiful trade, and this was an easy winner. But if I jumped in at 65 with weak triggers, I probably got stopped out. And that was a great lesson because chart reads, guys, confirmation bars when it's not perfect pay huge dividends. So you got to go back and study. This is the thing, you got to study, guys. Anytime your rules are met on the large chart, circle a tail. If that tail lines up with support inside of favorable large triggers, you have a trade. That's it. Your pullback starts at the top of the bar. This tail at areas inside of favorable large triggers, that's it. That's your whole pullback. Your small chart looks like the trend changed. Your large chart never blinks. You've got to learn this look so it becomes easy, guys. That's your goal as a brand new user. Your goal is to keep me busy with questions every time until you get there. So news in one. Got it. Guys, this is what we call a strong trending market. Someone had good news today, I guess. You're going to see this sometimes. Guys, if you see 30 bars in the same direction without a reversal bar, if you see 30 bars in the same direction without a reversal bar, you're in a strong trending market. Assume that rule number 1 is met, even if there's not separation. And one of the things people will do is when you have this look, they will buy the mid-band until it stops working or until I hit a termination condition. And guys, we just hit a termination condition. This is kind of a cool thing. So here's our fib. Let's take a picture. I want you guys to see how powerful these areas are. This market absolutely straight lined. And when they got close to the area, the sellers tested the water. And when they hit the area, the sellers tested the water. And the buyers said, you know what, sellers? We're going to push up a little bit higher. But now you see those triggers working their way inside. We're straddling that decision-making area, guys. Let's see what happens. Will the buyers win or will the sellers win? Does anybody know for sure? Hold on. I know how to determine this. Will the buyers win? The Magic 8 Ball says don't count on it. I don't know. Guys, you'll never know. But what I do know, without question or hesitation, is that this is where decisions are made. And you can see it on a small chart. You can see it on a small chart. So if you were long, what a great place to take profits, guys. Don't get caught in their fight. All right, it's Friday. It's gift giving time. Chart reading 101. Andy, you've got a Magic 8 Ball. You have triggers and areas. Guys, to get to where you want to be, you have to be able to recognize some looks and patterns quickly. But you know what? I think more importantly, I may change the language. You've got to trust some patterns. And this chart reading 101 is going to reinforce all the lessons that we just talked about. Let's make it bigger, old people. This is going to speed up the process of becoming a chart reader. This is going to get you to where you see these advantages in a heartbeat. And I say this all the time. The easiest way for the brand new user to get to where they want to be, guys, it's not necessarily taking trades, but rather taking pictures. So if my problem, here we go. If my problem is I tend to not trade with momentum and I get stopped out, I should be taking a lot of pictures of strong triggers and learning to trust them and going back and studying them. And if I have to know what the weak ones look like too, right? And if I keep trading in determination conditions, you know who you are. Why the heck have you not taken 100 pictures of termination conditions to make sure that you never trade into them so you always know in the moment? Same thing with a clear path, guys, and define your entries. Get good at it. And once that area breaks, guys, look at this. Strong trending market. Is it weird that there was a fight right at it, though? Pretty cool. Pretty cool. I love this stuff. Guys, take these pictures, but don't just take pictures. Annotate them. Talk about why your rules were met. Talk about why they were strong. Talk about why they were weak. Talk about your path. Talk about your entry. And then, big dog, I'm aiming at you here, and please take this with the love that it was intended with. If you post in my room, tell me why you did what you did, guys. Don't make me guess. Because if there's a challenge, I want you to recognize it as much as I recognize it. If it's outside of the best, I want you to know. Because the idea behind annotation is it creates repeatability, guys. When you can define exactly what you're looking at, why you did it, where you did it, and big dog, the second half of that is nothing but love. What a beautiful opportunity. But it's not an HVA trade. It's just not. Your trade, and we'll talk about why when I go through. And this is one of the reasons that we do it, right? Because you say, hey, this is my HVA trade. And I say, whoa, that didn't fit the rules for an HVA trade. But let's talk about why it was freaking amazing. And man, it was freaking amazing. And I do that, big dog and everybody in this room, because once you know what you're up against, once you know what kind of trade you're getting into, you know what your management plan has to be. So learn the looks, take the pictures, talk about why the rules are met or why they're not met, commit them to memory. That's that 101 section, guys. And I'll tell you what, I've done a lot of work for you. I've done a lot of work for you already. And then, as you take these pictures, we're new, right? Let's make sure that our pictures are the correct pictures. Because if I practice something wrong, oh my gosh, I'm just going to trade wrong. So what's a strong top or bottom? Well, that's a termination that reverses the market. That makes me happy. What's momentum? What's a loss of momentum? What's a termination? What's only the potential to break? And what's a broken area? Where do I put my order? How do I define my window? Guys, you have everything that you need to take the perfect pictures and make sure that you're committing the looks to memory. And then you get the second gift, the trend trade checklist, guys. This is the second page. Print this out. Please print this out. Somebody said that they printed it out and laminated it, and they have a dry erase marker, saving the trees. Nobody has ever been able to mark yes to all of these and done worse than 70%. It's pretty outstanding. Guys, all this is checks and balances. Did I actually have a strong top or bottom? It's not mandatory, but it sure does help. Did I have odds favorable momentum? Were there no terminations? And guys, inside a favorable large triggers, mark yes to all of these. Nobody's ever done worse than 70%. Most people are 85, 90 to be honest with you. But guys, this doesn't happen all the time. This is the first trade. We're defining entries so that we can manage as well. Print it out, use it, love it, respect it. And then that's going to carry you to the KISS plan, the Keep It Simple Sunshine plan. This is a stepping stone in your learning journey. I love that phrase. My brother came up with that. I was like, follow it, it works. He's like, no, tell him, it's a stepping stone. Guys, the high probability trend trade is your first trade. It is not your only trade. And this high probability trend trade and this KISS plan, guys, this KISS plan is designed to optimize your chances of success with the high probability trend trade. And I want you to let that phrase soak in. Optimize your chances of success. What does that mean? It means it's the best of the best. This is the highest probability trade that we've ever taught in Nexgen, guys. This is the foundation trade. This is the teach you to read your indicators trade. This is the, oh my gosh, I can't believe the patterns I recognize now trade because I understand momentum clear path. Guys, through simulation study, class feedback, and continuous practice, you will craft a plan tailored to your personal goals based on your ability reading the indicators. Amen. The high probability trend trade does not teach you how to get rich. It teaches you how to see the trades that are probably going to make you rich. Guys, this says that once you can read your indicators, you will see more. You will find more. You'll manage differently. You'll enter differently. You'll find more opportunities. But until you can do that, let's latch on to a moneymaker. Your simple plan for consistency. And guys, it's Friday. I dragged Friday out a little bit. Your simple plan for consistency, ladies and gentlemen, is do not fight the large chart. Don't fight the momentum on the large chart. Don't trade into the areas on the large chart. If you avoid those two mistakes, guys, you are better than like 70% of the traders in the world. Fighting the large chart is how we create financial suicide. I don't want you guys to do that. Define your entry. Get into the market at the right spot, guys. Because once you can pick out that spot where the market is most likely to continue, you understand exactly where the market shouldn't go, and that is your first stop placement. And there's this cool, if you Google successful traders, mature traders, confident traders, the one thing that you're going to see over and over is that successful traders manage their risk before they ever manage their profits. You guys have the ability to manage your risk by making sure that you're in a market with an established trend and momentum in the direction of that trend. You guys are managing your risk by not trading in determination conditions. You guys are managing your risk by defining where the market is absolutely most likely to continue and then putting your stop where the market shouldn't go, guys. This first stop placement happens after you've done an awful lot to manage your risk. And once it's there, one of two things are going to happen. You're either going to get stopped out or you're going to get a reversal bar in the direction of your trend, guys. If you get the reversal bar in the direction of the trend, this is your first stop movement. This management plan and the KISS plan, let me pull this back up, is the most mechanical, basic if-then scenario that I could ever come up with. And it's designed to get you paid. This is designed to take the emotion out, to trust the large chart, to be very pragmatic in your stop movement, guys. From where the market shouldn't go to protected behind when the market has done what it said it could do. And at this point, I'm either going to get stopped out for a smaller loss, or it's going to go to my first target. Guys, getting paid is the name of the game. That's why we're here. If it's not why you're here, tell me why you're here. The KISS plan says, hey, let's take profits at $100. Pineski, is there any problem with taking a $100 profit? No. If you ever look at Paul's charts, Paul's goal is to get paid. I love Paul's charts because he gets paid all the freaking time. Guys, once you're paid, you feel better. Your sweaty palms go away. The butterflies aren't there, right? The dog stops howling. You're feeling good. And you're going to move your stop to break even in the KISS plan. Is it the best stop ever? No. But you will craft a plan once you can read your indicators, once you get a little feedback, once you recognize some patterns, guys. And this break even stop, the only thing it's there for is to give you the courage to hold for the second target. And if you can't find the courage on simulator to hold for the second target, guys, you probably don't need to be going live. Because if you're terrified with absolutely no risk in the world, you're going to be flabbergasted. What a fun word. When you're live. So, go break even. You've already been paid. Life is good. You have nothing to lose. Let's see if we get stopped out break even or if it goes to the second target. And the second target's only $200 away from your entry. That's it. One perfect trade, 2 contracts, 2 exits, $300. Life is good. And guys, $300 doesn't feel like a lot of money, especially if you're used to making a lot of money. But here's the deal. $300 a day, if that's your worst case scenario, is a $75,000 year. And that's what people forget. I don't have to make all the money before 9 a.m. I don't have to make all the money on Monday. Guys, I'm going to make some every day. I'm going to make the best of the best every day. And once you get good at this, I firmly believe that $1,000 a day becomes a very reasonable goal. That $1,000 a day becomes a very obtainable goal. And you're going to learn how to get there through experience, through time, through feedback, through simulation, through study, through practice, through work. But the one thing you have to know, every time you get into the market, guys, or every time you sit down to trade and you're not on that simulator, breaking rules, learning things, you have to learn and know and understand and be committed to the idea of why you will enter a trade and why you'll exit. You have to have an entry plan and an exit plan, guys. Your entry plan is designed around rules because rules are patterns that have been proven to win more than they lose. You should be able to go find 50 pictures of your perfect long and it should win 40 of them, right? And you should be able to find 50 pictures of your perfect short and it should win 40 of them. If not, those rules haven't been proven to win more than they lose. Maybe it's not a good part of the plan. But then you have to go through all of the fear, anxiety, and you have to know why you're going to exit, guys. And you have to have an exit plan. And in the beginning, the KISS plan is pretty freaking outstanding. It's designed to get you paid. That's the goal. It helps kind of squash those emotions. Because emotions come from not knowing, or actually emotions come from believing you know what's going to happen next, right? I took a long trade. It should win. No. I took a pattern because the rules were met that has been proven to win more than it loses, but that means that losing is always an option. And you have to be okay with that. There's 2 types of people in the world. There's the people that tell you that they take losers and the people that lie. I'll send you a nickel, Ron. You're the one that said that. But it's true. It's true. So guys, if I'm in a high probability trend trade, I have to know my exit plan for that trade. If I'm taking a different trade, that 50-50 trade, I have a different set of rules for entry. I have a different set of management rules. If I'm in a momentum trade, the same is true. The same with these HVA trades. Guys, once you know what you're up against, you're going to know how to manage it. If you're not sure what you're doing on the entry, management becomes more difficult. So, boom, 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 boom. I'll send you some of my coffee. You know what, Ron? I go to sleep early, and I sleep well, and I wake up, and I feel good, and I do have a little bit of coffee. I'm just excited. I like what I do. Guys, there's every one of those Word documents that I just showed you. Here they are in PDF form in case you're not a Microsoft kind of guy. And the one thing that these documents do include is that PowerPoint that I use to teach the room every day. So you literally have everything that you need to be successful, guys. You have the rules for the high probability trend trade. You have them broken down individually, exactly what they look like, right? Thank you for that, Ron. You know exactly how to study it. You know exactly how to get feedback on everything that you've done. You know exactly where to put them to go back and study it, guys. You have a plan that has been proven to win more than it loses. The only thing I haven't given you is experience. The only thing that you don't have is repetition. And guys, repetition takes time. Experience takes time. Don't put the pressure on yourself. Do not put the pressure on yourself to be good at this in a week. That's not fair to you. Don't put the pressure on yourself to understand everything at a moment's notice. And I'm going to tell you right now, I'm the kind of person that does that. I'm the kind of person that puts pressure on themselves instantly. This new thing that I was learning, I told my wife, I was like, I'm pretty sure I'm functionally retarded because I don't understand this brand new thing in the first 30 minutes. And she laughed at me and pushed me outside and told me to go eat glue. Paste. Guys, the key to everything is having a foundation. That's what I help build. I help build that foundation. I give you everything you need to become a chart reader. And once you understand the basics, every day, every week, you're going to get a little better. You'll notice it. If you celebrate your victories, you'll notice it. But for you new users, I blanket with very conservative rules. And I'm telling you guys this because as we get into the second half of Classroom, you're going to see trades that are not high probability trend trades. I blanket you guys with very conservative rules. Guys, recognition of advantages, a solid plan that optimizes your chances of success as you learn to read your indicators. So for new users, all termination conditions are bad. No momentum is bad. Areas beyond the large triggers are bad. Blanket rules because it increases the likelihood of success. And guys, confidence comes from the memory of success. But they're not always bad. And until you have the experience to know when to use exceptions, guys, it's just safer that way. If you can be safe in the futures markets, right? But just like anything, the more time you spend with it, the more you see, and this opens doors for you. One of the biggest challenges that you guys are going to face as new users is you're going to see the older, more experienced users taking trades that don't fit the rules. You're going to want to do what the experienced people are doing. You're going to say, well, hell, John Novak took this trade. Why can't I take this trade? It's because John Novak has 27 freaking years ahead of you. That's not fair, right? I could hand you Mario Andretti's car. You're just going to put it into a wall. Don't worry about it. Look for the advantages in their trades, guys. They may be following their rules and breaking yours. It's okay. They're not paying your bills. But once you get some time in, you begin to recognize the patterns the same way they did, and you'll find more opportunities. And you've got to learn the process that yields the results, guys. All it is a pattern. It's a pattern that wins and a pattern that loses, and you'll never know what it's going to be. Your mental anguish comes from believing that you do. Your focus should be the execution of the method. It should be learning the process that yields the results, guys, and then sticking to it. And if you keep it basic, if you follow simple rules, if you're okay not keeping up with the Joneses, you can find an extraordinary level of success before you even know what you're doing. And I've watched it over and over the years, guys, and the further you new users deviate, the more you try to find, the more indicators you try to add, the more charts you try to watch, the more trades you try to take, guys, the longer it takes you to get to where you want to be. You know this, and right now you're like, oh my gosh, Mark's talking to me from behind the pulpit. I see you in here. Guys, question everything. This is the most important part. If you're in my room, you're allowed to ask questions. You can ask questions about high probability trend trades, medium probability trades, HVA trades, momentum trades. You can ask questions about any darn thing you want regarding trading. I will answer it. And if I don't have the answers, I'll find someone who does. But give yourself a little grace. This is for my wife. That's my wife's favorite word, grace. You're brand new. It's okay to be. So when I get back from break, and I'm about to take a break, guys, we're going to go back to your charts. We're going to talk about the 3 rules, and you're going to tell me what you saw. Because the goal is to become a chart reader. Are there any questions before I walk away for a minute? Any questions before we get to that next hour? Pretty good, huh? Okay. Cool. I'm going to tell a story. Fridays for stories, right? Fridays I like to tell stories. First of all, let's look at our read. Everything set up. Resistance broke. It turned into support. Guys, does anyone recognize where the market pulled right back to before the bounce? That resistance that broke and behaved as support. Pretty cool, right? Is it going up still? I don't know. Is it going down? I don't know. My triggers don't agree. My large triggers are up, but my small triggers are down below them. I don't have a clear path below me. I do have a clear path above me, but man, there's a lot of indecision right here. This may not be my trade. I had weak triggers that created a retracement all the way back to support, and then they came back up and I couldn't do it again, and now we're into resistance. But now I have momentum to the downside. All I need is maybe the potential to break, and I'll see what I can get done. I will be back in 5 minutes. When I come back, we're going to look at the 2.5 charts that have been posted this morning, which means that I'm going to run out of things to talk about. Guys, I've got 45 people in this room. I should have at least 45 questions in this chart, in this room that I can help with. I'll see you in 5 minutes. I'm going to go pet my dog. Stretch your legs, guys. Wouldn't it be awesome to have some sort of recipe that said, hey, when price reaches Fibonacci support and all the triggers are above it, this is an area that may stop the market, may create a bounce, may reverse that forward progress completely? Isn't that awesome? Very basic lessons, guys. Come back and pay dividends. So I'm going to scroll to the top of the room and I'm going to start looking at the pictures that you guys have posted. And honestly, I don't know that I have a whole lot of them, to be truthful. Joel got us started. And let's see what we had. Odds favorable, momentum, and a clear path. And Joel says, check this out, Mark. With all of this momentum and absolutely nothing in the way, I can find a way to enter and just ride that momentum all the way up to trouble. And Joel, this is fan-freaking-tastic. What an amazing, amazing trade. Nice job, Joel. I love that trade. How do you text on the captured picture? Let me show you. Let me open up my TechSmith cat. Hey, it's World Pasta Day, guys. Let me open up my TechSmith Red Eye and let's go through it together. So I'm going to go through it. I'm going to take a picture. Click, drag, photo. There's my picture. So all of the tools are here, right? Let me put a shape here. Let me put an arrow there. All of these are click and drag. You can go all over the place. And once you release, you're good. It's the call out box, Red Eye. You're going to left click and drag down and it forms that box. And here's the thing that people sometimes miss. Do you see the blinking cursor? I don't know if you guys can see that on the video, but my cursor is like blinking. I've got that white. That lets me type. But what happens is if, let's say I build the box and I click over here, that cursor isn't blinking. Even if I bang on my keyboard, nothing shows up. But once I click in the box, double click, it'll show you that. And then we're good. And then you can change colors on these. You can go like yellow or black or red. And sometimes people have it set at white and they're like, Mark, I keep typing, my fingers hurt, but I can't see a darn thing. Well, you got to make it visible. So make sure that there's contrast there. And if you want to give it a try, Red Eye, see if you've got it. And then once you do that, click copy. Come over to the chat box, Control V. Let's talk about it. Good stuff. All right, next picture. So Rob came in, and I love this. And this is a lesson, guys. Everybody has something that they have to work on. Everybody has a thing. Not everybody knows what their thing is. If you post in my room, I promise we will recognize your thing. Guys, everybody has a thing. And Rob, bless his heart, has the same one that I had. I tended to trade in determination conditions. I would get real excited about momentum, and I'd look at my small chart before my large chart rules were met, and I was like, man, I can't wait to take this trade. And the one thing that I had to do every time, and this is what fixed it for me, is every time I said, ooh, I need a trade, I see a trade, here's my trade, I would have to ask myself, did price reach an area? Did my triggers break? And guys, if I ever reached an area and my triggers didn't break, there it is there. There it is there. There it is there. There it is. I literally had to say this out loud, and sometimes I would even take a picture and annotate my chart before I took the entry. And that's what fixed my problem of trading into areas, guys. And that was my thing. And Rob, that's exactly what your thing is here. Triggers were up. You're coming from a great spot. Everything's cranking. But you reached an area and your triggers didn't break. And then Rob, the other thing is you say you have your stop where the market shouldn't go. And I understand the idea, but you got to get that entry. Got to get that entry first. That's a lot of risk directly into a termination condition. And guys, I promise you, everybody is fixable. Everybody can be fixed as long as you take the time to do it. So what I encourage you guys, if termination conditions is your thing, stop trying to take trades. Go take 10 pictures, because guys, this is the difference. Let me open this. Whoops. This is I hope it breaks. This is it's broken. And you got to know the difference between the two. I took so many of these pictures, guys. Just by default, I got good at it. Joel, odds favorable. The path is clear. I like it. You take a pull back to the area, right there at the base of the triggers, and it didn't work. Is the market coming from a strong top or bottom? Not quite, because the triggers got through. Odds favorable? Yeah. Terminations? None. Entry? Perfect. Joel, just didn't work. I love this trade. Who's taken this trade with this look and felt bad about it, beat themselves up for it, said, man, what went wrong? And you start over analyzing and you start saying, oh crap, maybe that separation wasn't enough separation. Maybe I was too close to this fib. Maybe that divergence, maybe these triggers. Guys, no. You had momentum, your path was clear, your entry was perfect, it didn't work. Sellers were assholes, Joe. Great trade. Great trade. And if you post it in the room, I'm going to tell you it was a great trade. Because I'd take that trade. It fits my rules. That's my job, is to take that trade because it fits my rules. Outstanding, Joel. And I dropped this one in the room. And guys, this is a management lesson. Remember when we said as long as price doesn't close on the wrong side of those triggers, it's going up? Paid dividends for me this morning. As long as price doesn't close below these small triggers, market's going up. If you're one of those jump in traders, if you're a momentum trader, this is your look to hold. Once you get a reversal bar, your momentum is over and it may retrace. I just wanted to share that one. We've been talking about that one a lot lately, and it's been helping a lot of people hold for bigger moves. Clear path, anything can happen. Little bit below, right? Just a little bit below the favorable large triggers, but a confirmation bar gets you to the next area. Nice. And then Joel, once you get below the triggers, guys, once you get to the wrong side of the triggers, it may pull lower. Look what it did here. You're thinking, man, the mid band, and it goes to the fib. The same thing could have happened here. This is one of those times where I'll say, okay, my entry isn't perfect. My large chart looks good, but my entry isn't perfect. That area is on the wrong side of those triggers. Let me force confirmation. And confirmation gave you plenty of room to get back to your target. Jeffrey Dean, are you using Snagit or Capture when you take pictures? Okay, cool. So let me show you. You can't do it with Capture, guys, unfortunately. Let me pull up the checklist real quick, and let me make it smaller because we don't want to put it that big on the list. So what I'll do, Jeffrey Dean, is I'll capture a picture of it, and man, keep it as concise as you can. You don't need it to say trend trade checklist really. So I've got this picture, and then what I'm gonna do? Oh, your capture. So capture, you can't do it. Drop the 65, because once you have snag it up from my little thing here, I can click it and drag it and pop it right on and put it on every picture. And guys, I don't ever tell you to buy software. I don't get dividends or whatever from it. But Snagit is $63. Oh, perpetual license. It's $39 a year for Snagit, guys. Capture software is amazing. Snagit is capture software with all of the bells and whistles. That's a pretty good investment, I think. And the cool thing about capture is it gives you all of the recents, and then it gives you the library. And you can like just crank through. Look at all these pictures. What is today, the 25th? Do you guys see how far down I've gone? I'm going to go down. What was the first day of the week? I stink at dates like this. The first day was the 21st. Guys, these All of these are the pictures that I've taken this week as I study a new trade, all the way down to here. Taking pictures is a great way to get good at things. All right. So that's how you do it if you have Snagit, guys. Let's see, who was next? Dun, 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 dun. Joel coming through. No pictures. You guys are such good students listening. Little late. Price was jumping fast. Momentum for the win. Base hits pay bills. So what Ron's saying is I have a strong trending market. There's not a darn thing in my way. My small chart's screaming up. Let me capture 115 bucks real quick. Let me take a trade that I've taken, that I've looked at, that I've studied, that wins more than it loses, and let me take it every day the same way because I know it brings me success. Guys, there's a lot to learn from this phrase right here. Base hits pay bills. You don't have to make all the money every trade, guys. Andy, strong trending market. JTFI got scared to death and jumped right out. Andy, what's your target? Not scared? What's your first target? You were in at 71. No, you were in at, I can't read it, 73? I like it. Andy says, I can just do this 5 times a day and make all the money I ever need to spend. That's cool. Put Andy on the spot. I said, were you scared? He said, hell no, I'm taking profits. I love it. So Tracy, to get the entry markers. And yeah, Steve, so capture, we'll do both of them. So once you take a picture and capture, Steve, click copy and just paste it in the room and then you're good. Or click upload and copy the screencast and drop it in the screen. Drop it right in the chat box. And then you don't have to go to screencast to do that. You can do it straight off of this. Maybe I hit video. And then guys, if you can't see your entries and exits, right click on the screen and go to data series and scroll all the way to the bottom. And I'll take a picture so that you guys have it as well. Whoops. That was too big. Right click, data series, and then right here, Tracy, plot text and marker. And that'll get you, and you will have to do it for each chart. So if you want to see it on both your large chart and your small chart, you'll have to make sure this is done on both. I personally, I don't activate them on my large chart because it just doesn't even matter to me. My entries come from a small chart. Did you guys notice weak triggers? And if you need any help with that, let me know. Andy, momentum and clear path. That's the one thing I wanted to say about yours. Momentum and clear path. Right? Momentum and clear path. Everything up, clear path. Target met. So you were in here. You took the trend trade up and got it. Nice job, Andy. Your stuff's wonky. It's all in the same place. That's what threw me off. Look at that. There's your entry. Perfect. There's your exit. Beautiful. Great job, Andy. Buy that mid-band until it quits working. Nice. Nice. Jonathan. Jonathan says, Mark, to hell with your eyes. Let me give you 8 acres of black screen that means nothing. And not one word written on it except trades. They sure were, Jonathan. You went long and got out, and you got out, and everything says up, and there was a pullback. And you did great. I'm assuming. I don't know why you did, but that's a win, right? You won those. And you're not going to show me your P&L. But that's a nice look. Sure is. Trading directly into resistance didn't work for you, though. There's an entry with a loser. There's an entry almost break even. There's two entries with two losers. There's an entry with a break even. There's an entry with maybe a tick and not one mention of any of these. But hey, Mark, look how awesome I can be. You showed me one trade, Jonathan. One trade. You skipped every trade before the big winner. Every trade before the big winner. You just showed me the one that went. That's it. The one that you don't need any help with is the one that you showed me. Guys, I love you all dearly. Jonathan, you know that. So here's the deal. I was trying to trade. Guys, we're gonna have a truth bomb real quick. Mark, I was trying to trade. That's why I couldn't post every one of these. But then suddenly I stopped trying to trade with the winner. After I had a big winner, Mark, I stopped trying to trade because I said, hey, look at this. Look at this. Not your grandmother's refrigerator, guys. Jonathan, let's talk about the ones where you didn't win. Let's talk about the ones where you gave money back. This is freaking perfect. That's beautiful. You know it's beautiful. You don't need help with that trade. You need help with the 17 before it to figure out how to avoid it. And that's up to you. You can do it, you can not do it. Guys, sometimes I'll do that. If you've been in my room long enough and you just start hiding mistakes from me, I will call you out on it. And this is where I go, I'm sorry if it hurts your feelings, but guys, tape up, play hurt. We're here to learn how to trade. And if all you show me are your winners and you hide every one of your losers, you're going to keep taking those losers. All right, Big Dog says HVA trade. All right, Big Dog, I got to blow you up here a little bit. So, termination, reversal, triggers going up. You have momentum. And then on your small chart, you break through and pull back. Are you with me, Big Dog? All right, where did we go? There it is. I want to make sure we get a lesson in this one because, man, this is a great trade. And Jonathan, this is the exact same trade that you took. And just a heads up, guys, if you call me a dick, I will kick you out of this room. Termination, everything's going up. I love this trade. Jonathan, you knew this trade. This is the one that you absolutely nailed. And guys, all this is we've got the potential to break here. Everything's getting above. And Big Dog says, check out this. This is the best momentum ever. And there's rules that say when I come from a termination and everything is screaming up, let the small triggers break, snap back, and go. And guys, this is a momentum trade. And this is a beautiful trade. This is an amazing trade. Jonathan, you took an amazing trade. Big Dog, I hope you're in here listening. This is rock star, dude. And look at the lesson. If I don't close on the wrong side of those small triggers, it's going up. Love this trade. Great job. But it's not an HVA trade, and that's the one thing that I wanted to point out. Your HVA line was below all of the trouble. All the trouble. I mean, all the resistance, everything. That HVA line, that's a tough one. You took the perfect trade. If you waited for an HVA line, you missed the whole move. So this is an awesome trade, big dog. I'm just going to get you on what we call it. It's actually a momentum trade rather than an HVA trade. And I hope that makes sense. And if not, please ask. And guys, price clears trouble. Strong trending market. Get over the line. Make quick money. Get out. Beautiful trade. Once again, nicely done. I like it, Ron. 8 Ball says winner. I didn't even see that. 8 Ball says winner. I love it. All right, Tracy, let's see what we're doing here. FOMO, weak top and bottom. So you don't even have a top yet, Tracy. Let me know if this makes sense. You don't have a top yet. You're getting real close to resistance. Real close to resistance. But you're not quite there. You actually have odds favorable momentum, which I like very much. You had a clear path, which I like very much. And it looks like you actually had a strong bottom. You had that no triggers through termination that reversed the market. This, Tracy, is the perfect look. Are you with me in here? I've got one tiny little adjustment. So this is the area. Whoops. I did it again. This is your area. Golly, I'm struggling. This is your area that's most likely to create a bounce, Tracy. Your entry isn't at the bottom of the synthetics, and this is where language is going to begin to pay dividends. Entry at area inside of triggers. So the triggers are where the market may return. The area inside is where it's most likely to create a bounce. So if you put your entry at the bottom of the synthetics, you really do run the risk of completely missing the trade. Does that make sense? But everything on this is perfect. Did it lose? I'm wondering because I saw the FOMO. Did it lose or did it win? Even the stop's in the right spot. I mean, you took the perfect trade with all the advantages. And my stop is 4 or 5 ticks, which puts me right at about 54.25. I'm just curious how that one worked out. Okay, and it happens sometimes. And this is where talking about advantages, I think, helps out a lot, Tracy. Because if you looked at this one, right, and you annotated it perfectly, and you get the experience, you start to get those reps, you're like, wait a minute, I had momentum, and I had a clear path, and I had an entry area, right? And this picture looks exactly like that picture, which is freaking amazing. Then you can say to yourself, this is a trade that typically wins 70 to 80% of the time. This is one of those costs of doing business. I love everything about this trade, Tracy. The only thing that I would adjust is your entry because, and here we go, price may return to the bottom of the triggers, but it's most likely to bounce off of the areas inside. And I think that's really the only lesson I could give you on this one. That's okay. Only losing $100 is great. But does the entry lesson make sense? And you don't have to follow those. But I'd hate to see you miss out on that $100. And then you get a good top. Everything says down. Price cleared 1-to-1. So this is one of those momentum trades, Tracy. This looks exactly like the one Big Dog and Jonathan took the other direction. You come to the other side of the 1-to-1s, sell the 1-to-1s, and down it goes. And that's your momentum trade. Great entry. Beautiful entry. Awesome trade. Nicely done. And it's repeatable. Good job, everybody. Joel, let me see where we're at. Get the termination. I mean, just Terminationville, population U here. Strong triggers roll up. There's your HVA trade. Termination, triggers roll, pull back to the HVA. Joel says, go cat go, and rides it up to the fib. Joel, this is freaking amazing. Ron, have a great day. See you Tuesday, man. See you next Tuesday. Giggle, giggle. Joel, I love it. It's perfect. It is the perfect HVA trade. Termination. Where's your large chart? Termination. Triggers roll. Snap back to the HVA right there at the triggers. I mean, Joel, dead to rights. Beautiful. You could teach an HVA class with that picture. Jefferdine. Let me see what we're doing here. Realized this was a bad entry. Large triggers and since were above my entry. Was seeing a clear path down to the next. Divergence. Everything was looking down but went straight past me up. So I tightened that stop down. Only lost 80 bucks. This one got me. Can we talk about rules? Do you want to, Jeffrey? I love the conversation. I love the conversation on the charts. One of the things that I want you guys to do, and I can't make you, let's talk rules. Like, let's talk rules on every chart that we post. And I want you to see how effective this can be. And Jeffrey, thank you for giving me a picture to do this with. Is the market coming from a strong top or bottom? The answer is no. This is a pivot right in the middle of nowhere. Everybody with me so far? Because we're going to break this down one by one. Do I have odds favorable momentum? Absolutely I do, guys. I have the best momentum ever. Look at that. Separation, strength. Everything says go, go, go. So we're good, right? This one's not mandatory. It just increases the likelihood of success. And Jeffrey, what you did is you just opened the doors for a beautiful lesson. And it took me 3.5 years to learn this lesson. Because Tracy, in order to have a strong top or bottom, thank you for asking. In order to have a strong top or bottom, what has to happen first is it first has to be a termination condition. So first it's a termination condition, which means that price reaches the area and then it reverses the market. So what happens is if it turns and it's not from an area, the likelihood of it going back up is still there, which is why your 50-50 trades require a strong top or bottom before. Does that make sense? No, divergence is not a termination condition. Man, you're asking all the good questions. And Jeffrey, I'm going to get back to what you said. But first we're going to do this. So let's go through the process. A pivot is an up and down. Just an up and down. If there's a loss of momentum at the pivot, that's when we get divergence, Tracy. But do you remember the recipe for a termination condition? Price reaches an area. And guys, the language becomes very important. Price reaches an area. So what happens is divergence creates the area off of the pivot. Whoops. Divergence creates the area. And then let me go find a large chart. And then when price reaches the divergence, that's when it has the potential to be a termination. So divergence creates the area. When price reaches it and the triggers stay below, Tracy, now it's a termination condition. Does that make sense? Here, divergence creates the area, but price never reaches it, so it never gets to be a termination condition. Do it again. And this is a good lesson. Let me take the picture, and we'll create a little pivot stop out, a little divergence as a termination picture. And I love pictures. So price goes up to right here, and then price goes down. So Tracy, two and a half bars below the pivot, the calculation for divergence is done. And if it's true, then the line prints. So price versus momentum creates divergence. So we don't even know about this line until all the way down here. And then we're going to do this one. So over here, to recognize a term condition, price reaches an area, triggers remain below resistance. Now that termination line, now that divergence line becomes a term. Does that help? So it creates the area, but it takes price returning to the area and the triggers being below, and then that's what's going to define that termination condition. Does that help? Does that take kinda to sorta at least? Awesome. It's only a divergence. That's it, Cheetah. But here's the deal. Jeffrey, I promise we're going to get back to yours. Here's the deal, Cheetah. Do I consider this a strong top? Hell yeah. So, Cheetah, what defines a strong top? A termination condition that reverses the market, right? Isn't that always the recipe for a strong top? So when we say a termination that reverses the market, we don't say a Fibonacci area that reverses the market. We don't say a one-to-one that reverses the market. We say a termination condition. So absolutely, Cheetah. And this is where language becomes important, because wouldn't it suck to miss something over here when you had that, if what you had required a strong top or bottom? So embrace the language. Just a divergence becomes a termination. When the termination reverses it, now it's a strong top. Great question, Cheetah. Does that make sense? And then this one turns from the middle of nowhere. That's not a strong bottom because it doesn't come from a termination first. Great lesson. Great lesson. All right. So let's go back to Jeffrey's. And Jeffrey, I've got an extra lesson on yours too that I didn't plan on teaching, but now I can. So when we go through Jeffrey's chart, termination conditions not true, large chart. So Jeffrey, that fib is still in play, but it looks like a clear path, doesn't it? And you're thinking, oh cool, it stopped printing, I've got a clear shoot. Man, Um, Cav in this room was nice enough to have me get this lesson. And I'd never known it before, Jeffrey. So I don't want you to feel bad about taking that trade because it did look clear. But when I'm looking for areas in the large chart, guys, there's 3 sets. No, Cheetah, what you just did there is you said the market will. No, you never know what's going to happen. So anything that's native to the chart, the 13.2 fib, will extend all the way into the wild blue horizon, Jeffrey, and everybody else in the room. Anything that is synthetic, any Fibonacci areas that are from a different time frame, will not print until this bar prints. So there it is right there. It looks like there's a gap, right? The 13.2 goes all the way, but this one stopped printing. And instantly your brain goes, cool, clear path. And it's not the case. And if you'll notice, your mid-band does the same thing, and your one-to-ones do the same thing. So the native fibs are the only thing that are going to extend all the way over. So Jeffrey, you got flim-flammed a little bit unintentionally. It looked like it was a clear path, but it really wasn't. It was directly into a fib. But I could see why you thought. So you had momentum. You had a seemingly clear path. But what you didn't have was areas inside of favorable large triggers. And Jeffrey, your entry is a momentum style entry, but the one thing that you were missing was the termination condition before it. So if this was coming from a fib, that is the perfect momentum style entry. And if this one fails, then you have to look for triggers. But that's a great lesson on those synthetics, because see how the 13.2 extends, but the 21 seems to stop? Kooky crazy. Does that make sense? So I like that you only lost 80. I like that you didn't lose a lot. This is the momentum trade, fails. And you notice that the gap theory is kind of in effect here too. Great picture. There was a guy that traded in here, and you guys have seen him. He's a freaking phenomenal trader. But as he was learning, he kept telling me that he had a clear path, and we had a private conversation. And I was like, man, show me what you're looking at. And he goes, look, it's there. It's not there. And I had to go to John Novak and get a little coaching on that one. So, Cheetah, let's address this one. So from the weak bottom, we'll revisit the fib level, or to create a right term condition, then reverse. So when I have a weak bottom, let's talk in patterns that repeat themselves, but not absolutes, if we can do that. And we'll see if we can find a couple examples of it. This is a good one. When I have a weak bottom, the likelihood of the continuation up isn't as strong. And very often from a weak bottom, the mid-band or fib levels, these are less likely to break. So like if you have a 50-50 after a weak bottom, it's less likely to break. If I have a weak bottom in the middle of nowhere, divergence, that mid-band has the potential to hold. This becomes my first bounce point. Not guaranteed to hold, but I have to be aware. Weak top, it retraces all the way back to the fib, and then they try to continue up, but then it turns into a termination. Weak bottom, and the fight comes. So having those key areas, it just creates a little giddy up. So here's that termination. This 50-50 trade works right after it because they have that impactful. So this would be considered a weak bottom that we're doing right now. Small triggers got through, large triggers didn't. See how it pulls right back to the fib areas, but all the triggers are below? Little indecision moment right here. They may want to continue down, or they may want to continue up because this was a weak top. So we wait for that agreement on all levels. Good stuff. I like lessons like that kind of present themselves. And that was a good one on the synthetics, Jeffrey. So thank you for that. Steve Diego took a trade before he ran errands. Great annotations as usual. Price above, large strong triggers, small strong triggers separated from large triggers. With this momentum and trigger, look, price has the potential to get to fibs. I love it. It has the potential to get to fibs. With all that momentum, look at this. Small triggers break, snaps right back. There's your momentum trade. Money, money, right at trouble. Absolutely beautiful. Guys, there's quite a few of you in this room that are taking this beautiful momentum style trade. If you tried to trade into the fib, untradeable bounce. When you trade from the fib with all the momentum, life tends to get easy. Great trade, Steve Diego. And Jeffrey, you're welcome for the lesson. Guys, I'm telling you, I don't make this class a good class. You guys make this class a great class with the questions that you ask, with the opportunities that you give me to talk about these patterns. And Jeffrey, I noticed that you took the first one. I'm sorry, Steve takes the first one, guys. When it starts to break, he gets in right here and he's like, man, everything's perfect. And then when it closes on the wrong side, that's the failure. And Steve had to make a choice. He says, do I exit or do I still have the rules met for a momentum trade? Maybe I just have to take a second shot or just add contracts. And I love this. What a great trade. And this is what happens. This is what happens when you recognize things. All right, let me go over the notes. Cleared trouble, no odds favorable on the 13-2. You had odds favorable on the 13-2. Oh, I'm sorry, this is NASDAQ, on the 34.5. Okay. Pull back to favorable large triggers at the area of fibs. Perfect. Divergence printed but stuck with long on the strength of the 34.5. 3 contracts out at 320. 1 contract off it at 245. I like everything about this. And you're absolutely right. Momentum. Right? Momentum. And you're on the good side of everything. And the triggers are up. And every indicator on your charts says up. That's awesome. It's hard to go wrong when everything is screaming the same direction. It will every now and then. This could have just not broken and pulled back. But notice that he references the strong bottom as well. I love this. You just put it all together. It's a great chart read that led you into a rules-based trade. That's all I ever hope for any of you guys. All right, Red Eye. Red Eye can ride on charts now. I love it. Remember, if you're new, we're going to go back to momentum, clear path, and entry every time. Enter just past divergence, exited past reversal bar. All right, so red eye, 92, 92. And you're actually a little advanced here. Termination holds. That's a nice thing. Everything rolls. That's a nice thing. And you're taking one of Ron's trades, right? Let it clear and take the base hit when all your indicators say up. The one thing that you don't have here, Red Eye, is, well, you traded up to the problem. I love it. And you got paid it right when the problem put you to the wrong side. I like this trade a lot, Red Eye. This is advanced. Are you sure you're new? It's like a spy coming in from someplace else. Termination holds. Everything rolls. You get to the good side of trouble and capitalize all the way up to the problem. I mean, that's amazing. Same trade twice. So here's the one thing that I want you to do, Red Eye. Ready? Can I be a pain in your butt? Okay. As you learn Nexgen, I want you to do me a favor. If you don't mind, if it's not too much trouble. Guys, if you take your picture, right? And I love the entry. This is why I did what I did on the entry. Talk about what you see in terms of momentum, clear path, and entry every time. And it's not because I need it to read your charts. I promise you, I can read your charts. But what we're doing is every time you guys take the time to talk about these 3 very basic concepts, you're reinforcing the rules. You're talking about what it is you're looking at and why you did what you did. And what it does is it creates repeatability. And one of the things that you'll notice, my most successful traders in this room, the absolute most successful traders in this room, do the same darn thing every time, and they know exactly why they did it. Where's it at? They do the same darn thing every time, and they know exactly why they did it. So I know it feels like I'm being a pain in your butt. I'm saying, man, do this, please. I need you to work hard at this. But what I'm really doing is I'm trying to set you up, Red Eye, because this trade is 32 flavors of awesome. And I want you to recognize that it was a bad top, because the bad top increases the likelihood of support holding. And when the triggers don't get anywhere near it, it increases the likelihood of support holding. And when those small triggers start to roll and every trigger's headed the same direction, you took the perfect look to get up to the problem spot. And man, what a great trade. What a great trade. I just want it to be repeatable. I want you to be able to do this every day. I want you to be able to capitalize on this look, to recognize this pattern, to understand the advantages. And that's what gets you consistency. Doing the same thing every time. Every time. Good stuff. Great trade. Let's go see what the live market's doing. You're welcome. So this is the S&P. Small triggers are up, large triggers are down. That's not a momentum look. All my triggers are below the lines here. They're all above the lines there. That's not a clear path either direction. And guys, I want you to see the fight. If I circle, we'll do the bars that are straddling the fib. That's your fight. Those are decisions being made. This is what we want to stay out of. Does that make sense, everybody? The buyers and the sellers right now are taunting each other. They're yelling at each other. They're saying, we're going up. And the other ones are saying, no, we're going down. And the buyers say, but I have a support area. I'm going up. And the sellers say, yeah, but I have resistance. I want it to go down. And it's this tiny little ugly as sin range. And they're just fighting. Does anybody want to be caught in their indecision? Larger up, synthetics are down, divergence is above, divergence is below. Large triggers down, small triggers up, bad top. Ye gads and little fishes, guys. This is that 90%. Hi. I haven't done this trade setup, but on the 5-1, I'm getting multiple reversals noted by the black squares. The 13-2 shows all the diversions, warning not to enter the trade at this point. Which direction, Big Iron Mike? Up or down? How did I get there? But my question is this a precursor for the continuation down and to be ready for a short when my triggers overlap? Or can I locate a diversion to place my limit order? All right, so let's look at the whole thing. And we just kind of talked about it a little bit, Mike. The color says that the trend is up, right? And I'm just going to go through my chart read one by one. This says that the trend is up, right on. The immediate momentum says up, but the overall momentum says down. This creates a huge conflict on its own, but the fact that they're trapped in between two areas creates an even bigger conflict. And here's kind of my favorite thing, Mike, is you said getting multiple reversals noted by the black squares. I'm going to make your black squares white squares. Is that cool? And I'm going to show you something neat. Mike, you're thinking short trade, right? You're thinking, I need to take a short. Because what about the noted reversals as indicated by the squares beneath? Absolutely no mention of those, right? So what you're doing is you're looking to support the idea that you want to take a short trade. Possibly, perhaps, allegedly. It may not be truth. Does that make sense? But was your bias down? And I'm just curious because this is a neat look, and it's such a, man, it's gonna break. it's going to break one way or the other, right? So the bias was down, but you said with the strength of today, the strength's been up for the most part. But you're right, the bias is down because the larger triggers are down. So what did this little area give us in between these fibs? All it says, Mike, is hey, let's let one of them break, right? Let's get at least small triggers with strength to the other side of this little consolidation point. And I don't have any idea how long it's going to do this. I don't have any idea how long it's going to dance in this range. But I really do think that you were onto something, because the large triggers, the bias is down, without a doubt. There's just nowhere to go with it. Does that help? Does that answer? This is for me. This is, I love everything about this setup. This is the 90%, but what is it teaching you? What it's telling you is, Mike, you have two very clearly defined Fibonacci areas, and you have indecision. And what it does is it keeps you from giving money away, right? From saying, and I'm just going to do this again. And this is what I used to do, which is why I recognize this so much. So I get this look, and I try the short. And it's a 50-50 from a bad top. My rules say don't, but I try it anyway. And I get stopped out. And then I go, wait a minute. This is a long. And I get excited. And then I get stopped out. I'm like, wow. And it's so easy to take 7 or 8 trades. I used to, oh my gosh, Mike, I can tell you that I've lost like $1,000 in 20 minutes trying to predict. If it's really going down, the small triggers will roll. If it's really going up, the large triggers will roll. This is such a great picture, Mike. Thank you. Such a great picture. But without a doubt, the bias is down. The non-conventional trades. So here's the deal: is the trades triggered by the HVA and the arrows? Those trades are triggered because the Renko bar charts are true. Does that make sense? So an HVA trade says don't trade into a termination condition, which means that you can't take the HVA trade because it's directly into a termination condition. The HVA trade says that it has to come from a no triggers through termination. So now I have a no triggers through termination. Now everything's rolling. And check this out, Mike. Uh-oh, where'd it go? With the break, now maybe I start thinking, right? With all the triggers going down. Yeah, I've seen it. You like that chart? Do you want me to be... I'll tell you what. I know a lot of people do. It's too much information for me. It's too much information for me. He gave it to me. But what it did is it gave me too many reasons to take the wrong trade because I didn't have to turn my attention to a market flow chart after the rules were met. I would start to create scenarios where my rules were met. Oh gosh, no way, Mike. Dumber than a sack of retarded rocks. I need very clear patterns with very few opinions. And that's what pays dividends for me, right? Because when I say I think it should break, and here's the deal. So the Renko bars didn't say that we had a long trade. But you could have easily said stranded sellers, I'm going long. Well, it's an HVA, I'm going long. Well, there's another HVA, I'm going long, right? But the rules aren't met. Or you could have said, hey, look. Well, there wasn't a short. Oh, there's my HVA. Let me go short, right? But it's right into trouble. And one of the things that happens a lot is we forget to let the chart that matters lead the way. And man, and Mike, this comes from every mistake that I've ever made in my life trading. And I've made every mistake. if the large chart doesn't say go. So with the small triggers above the large triggers, I don't have momentum. With none of the triggers below 1-to-1s, I don't have a clear path. And I always go back to that. I always go back to that. And if I don't have a clear path yet, if I'm into a termination condition, then I'm not allowed to take the HVA trade. That's what my rules say. So Mike, you're absolutely right. The high probability trend trade is infrequent. It definitely is. And that's why I say that it's the first trade, right? The high probability trend trade is the first trade because, Mike, you did a great job on it. And you never miss out on momentum, right? You always know what momentum looks like. And you understand the concept of termination conditions. And then once you have those, it's this magical unicorn that takes you, hold on, let's get there. I love doing this. This is fun. Hope you guys are having fun. Yeah, video watching is cool. You know what's better though, Mike? Is watch the video, go take a couple pictures, bring them to the room, and let's have a conversation like we're having right now. You'll get there quicker. So check it out. HVA momentum trades. This is what I like to show. Top and bottom plus triggers, right? So rule number 1 is a good top or bottom. Triggers don't break the area. So everything that you guys learn about termination conditions in the high probability trend trade lends itself to the HVA trade. No termination conditions, room, right? So everything that you learn from rule number 2 in the high probability trend trade comes into play here. And then you just define your entry. And that's it. And the same is true with momentum. Termination conditions, and then define your entry. And very much, guys, that's what we're looking for. So first it's a termination, right? And now we're letting it roll. Let's get below. Look at that, larger through. So at least now all of my indicators agree. And Cheetah, did you notice that it was from a bad bottom? And this held? And now all of my indicators agree? Oh, and it stinks because I have to do nothing. I have to do nothing for a while. Guys, I hate doing nothing. I can't even have conversations without doodling on a piece of paper if you ever want me to actually retain anything that you've told me. It's just the way my brain works. So that's just one of those, let's let it break. You can do anything you want, Cheetah. How cool is that? I will never tell you what to do. What would your rules be? Oh, you know what, Mike? It's okay to not be active in here. And you know that if you guys are doing stuff and you need help, you can always email too. I don't mind. If you can't make it to the room, I still got you, but I appreciate that. So Cheetah, are you saying, let me just get this. You're saying take a trade below this red fib right here? Okay. So do me a favor. I'm going to do this right here. I'm going to take this picture. And Cheetah, I'm super going to play devil's advocate here. Lenny, this is me. I'm going to tell you guys right now, if you're in my room and you refuse to post and you send me all of your pictures and want me to sacrifice my weekend to annotate and analyze all your charts, I'll tell you I need you to post in the room if you're in my room. I'll still help, but I'm not gonna devote 2 hours of my free time when I give you 15 hours of my being paid for it time to get you. But if you ever need help, reach out. Always reach out. I have an inability to not help. All right, I want you to see something, Cheetah, and this is just devil's advocate, okay? This started getting below the red fib. This got below the red fib. That got below the red fib. This was below the red fib, right? So there's a lot of things. So just below the red fib, maybe not the best recipe. I have no momentum. It's directly into a termination condition. So Cheetah, could you take the trade? Of course you could take the trade. But I'm hard pressed to find an advantage that makes me feel like I want to risk my money. There is none. There is no. My confirmation for the better entry is my rules met. And I know that sounds so Sunday school answer. Just because there's movement doesn't mean that there's a trade, right? So what's my confirmation? For which trade? For which trade? For the HVA trades, it's right here. For the momentum trades, it's right here. We weren't talking about a trade, Cheetah. What we were talking about was a scenario where there is no trade. There was no trade. There was no momentum either direction. There was no clear path either direction. What we were talking about is how easy it would be to give away $1,000 right here without having advantages. Does that make sense? I see what you're saying now. There just wasn't one. There was no trade. That's exactly what we were saying. No, we said if we get below, if everything breaks, if we're going down, if the path is clear, there may have been an HVA opportunity somewhere about right here with a pullback, with the clear from the termination, but it never set up. I see where we're at. It just never set up. And now we've broken and we have the potential to break here. So I have one of those 50-50 looks. I have what we could call a strong top. I have the potential to break. Divergence for some of you kills it, for some of you doesn't. But didn't this pull right back to resistance inside of triggers? And it's on its way down. Pretty cool, right? Now, Cheetah, we all have. We all have. But one of the things that rule number 2 does for us is it reminds us that there's just no room to get to where we're going. And I love rule number 2 for that. And let me show you how freaking amazing rule number 2 can be. So check it out. Termination doesn't break, termination doesn't break. Potential to break, doesn't break, potential to break, doesn't break. There's all of these things, right? There's all of these. Question for confirmation of your account. So what happens, Cheetah, rule number 2 is designed to keep you, oh, your action, I got you. Rule number 2 is designed to keep you from trading into areas that may kill the market. That's all it is. And what sucks is sometimes you think you know what's going to happen. Some people in this exact look, and this is cool because I can do both sides of the coin. Some people would say the bad top, this market's going back up. Let me try every opportunity for long, even though it's into a termination. And some people say, well, everything says down, let me get rattled around for shorts. But check it out, Cheetah. Once we get the potential to break and the pullback right to resistance right there, this is the momentum trade. And it killed it. And now I have momentum. And now I have a clear path. Do I have areas inside of favorable large triggers, ladies and gentlemen? I don't. Rule number 3 is not met. So is it going to go from here? Is it going to come up to the mid band? Is it going to go to these 1-to-1s? Is it going to go to these 1-to-1s? Does anybody know for sure? I have no freaking idea. Once I'm on the wrong side of the triggers, I don't know where it's going to go from. My entry isn't perfect. Some people will wait for a confirmation bar in this situation. Some people will just jump in. What does your plan say? My plan says, with a confirmation bar from the area, I'm willing to take a shot at this trade. That's what my plan says. And there's a cost to confirmation. And I haven't made it back to my area. But these are the things that we work through, right? And one of the things that I did, and one of the reasons that the KISS plan came to be, it's Friday, we're talking now, is I had a gentleman call me once, and he goes, "Hey, Mark, I suck." And that was essentially what it was. "Mark, I'm no good at this. Mark, I can't do this. Mark, this is so difficult. I'm looking for every move in the market, and the only thing that I can find is losers." Has anyone other than me been in that position? That's how we wrote the KISS plan. I said, well, let's just go through it. And I asked, I was like, "How are you with momentum?" He's like, "I'm great with momentum." "How are you with termination conditions?" "Well, I struggle a little bit." "Okay, let's focus on those." "What about entries?" He goes, "Which ones?" I said, "Just the high probability trend trade." He goes, "I don't understand it." I'm like, "Well, that's the easiest one. That's the highest chance of success." So we said, let's just try something crazy. Instead of looking for every move, instead of trying to figure out how I can get into the market here, let's change it. Let's change it and say, hey, should I be trying to get into the market here? Do I have the advantages that I need to get in the market here? And if you, every time you look at your chart, you start saying, do I have momentum? Is there a clear path? Do I have an area inside of triggers? If you say this every time, sometimes what you're going to have to say to yourself is, I don't have a trade. Does that make sense? Am I sounding preachy? I hope so, because I'm preaching a little bit. You ever sat in church and you're like, oh my gosh, he's talking right to me? If you feel that way right now, guys, I'm talking right to you. I'm not asking how I get into this move. I'm saying, thank goodness my rules aren't met. I didn't get chopped up while it consolidated. Odds favorable, clear path. Do we take
order submitted,
the reversal bar off of the area? What do you guys think? Does that make sense? My entry isn't perfect. I'll force them to go in the direction of momentum. I'll force them to go in the direction of the clear path. I'm not going to just hope it goes because my rules aren't met.
order canceled,
Something to think about. Lenny. No momentum, terminations everywhere. All the triggers up, the mid band's up, the path isn't clear, the momentum isn't there. What trend were you trading with, Lenny? Because your large chart says up. But your trade was short. And you said that you could have held on longer. Do you see how... All right, I'm going to do what John Novak used to do to me. You don't have to answer. If I'm going to sacrifice my money, is this my best look for a long trade? Is this my best look for a short trade? I'm trapped in between two areas with no momentum. Lenny, I'm glad you got paid. I'm glad you got paid. I think that's amazing. And if you're going to trade in a tight little range, guys, from edge to edge is the right way. But Lenny, every trigger line was up. On your small chart, that's a tough look. Triggers was up, triggers up, triggers up, triggers up, triggers up, triggers up, support held. It's a tough look. I'm glad you made money on that one. If you waited for a reversal bar, you're in this trade. Cost a little bit. Does that make sense, Lenny? Joel, everything says up. No clear path. I love that you identify it. What's he doing? He's saying, this is what I'm up against. No divergence, strong triggers. Let me catch it on the way up and get paid. Red Eye, it depends on what kind of trade I'm in. It really does. It depends on what kind of trade I'm in. If I'm in a trend trade that looks like this, I'm probably holding for the fib, at least on my second contract. Reversal bars, the only trades that reversal bars are an exit for on me is if I take a momentum style trade. So if I go short right here, and I'm saying I'm going to ride this momentum until there is no more momentum, for me, the close of that bar is where I do it. And the reason I do that, Red Eye, is because there's 1, 2, 3 times where they could have head faked me. Does that make sense? There is never the beginning of a reversal bar. A reversal bar is only a reversal bar when it finishes printing. And you will see these tails all the way down. And if you let them fake you out, they're going to fake you out, even on the way down there. So guys, if you waited for confirmation, you're doing all right on this trade. Lenny, odds favorable, clear path. Let's get in, let's get paid. Lenny, beautiful trade. Was that you? That was you, right? Love this trade, Lenny. Isn't it easy when everything is up strong? Everything is up and strong. Nothing in the way. Dude, I love that trade. Pete. Sorry for no post today. That's okay. It happens sometimes. Triggers rolled up, separated, big mo. Don't really like this look because of so many terminations. But when you take great entries, you have the potential to make money. 50-50, 2 divergences, avoidable losses. Great heads up going the other direction. Oop, Lenny, we saw yours. Haji, same trade. Everything up. It's a potential termination conditions, but the triggers are strong. You guys are killing it, identifying what the problem is, so I know if I need to be aggressive. Because of the lack of clear path, I took confirmation. I took quick profits because my job is to get paid, but let me hold that thing all the way up. And then, Haji, have you listened to the lesson? As long as I don't get a close on the other side of these triggers, it's still going. Pretty cool, right? Great trade, Haji. Beautiful trade. And guys, you don't have to incorporate that idea, but it really does. When there's times where I'm just like, man, I want to hold for the bigger move. I want to take that big move, and if it gives it to me, I'm willing to lose $100 for the opportunity to make a lot more. This one seems like you never get the pullback on it. It feels that way sometimes, doesn't it, Tracy? Feels that way. That's that 90%, right? So guys, if you waited for confirmation, you made your target. So let me ask you this, and then Tracy, we'll go to crude oil to take a look. I want you to ask yourself real quick, is it okay to stay out of this mess? Because guys, there's other trades when everything agrees. And what everybody in this room just showed us, which is pretty cool, is when everything agrees, even if it's not high probability, you'll probably find a way to make money once you start embracing advantages. Pretty awesome. And Tracy, let's go to crude oil. Yeah, it just didn't give it to you, did it? It went straight without you. That's tough, isn't it? That's what we call not my money. And it's hard. It's hard to watch it do that. But Tracy, the key is, and you're brand new, and I want you to remember that, it's not your money yet. It's not your money yet. You're going to find a way. You will. You will find a way. Right now, you're still you're getting those ideas of momentum, of clear path. And what you'll do, Tracy, is exactly what the other guys did. And once it did pull back, you got stopped. Where did you get in? Show me the picture. Do me a favor. Show me the picture. And you're going to hate this exercise. And I want you to describe the momentum, the path, and the entry area. And I'll tell you what, I'm going to do the exact same thing. Oh, okay. So check it out. I don't have odds favorable momentum, but it is strong trending. So I can say rule 1 is met. Cool. Does that make sense? Whenever I have that piggyback look, I can say rule number 1 is met. Large triggers are not through. This is not a clear path, but rather the potential to break. Rule 2 is not met. Does that make sense? So this would be like a strong trending market 50-50. Are you with me so far? Wait for the reversal bar. Define your entry. That's where I'm thinking right here. But because it's not a clear path, I have to be weary of divergence because divergence can kill a 50-50. So I don't have a clear path. It is a strong trending market. And my reversal bar finishes printing at the base of the triggers. So I can't even define an entry because it's dissected it. And then everything beyond it, I don't know what's going to happen. I don't know where it's going to go. Rule number 3 is not met. For a 50-50 trade, the rules aren't met. And it did exactly what we thought it would do. Write a determination that hasn't broken with divergence, no areas inside. It retraced, and it retraced big. And then when it gets to the mid band, when it gets to support, check this out. There was a momentum trade to try to catch it down to there, but once I get to support, my large triggers are a full bar away. This is the gap theory. Price is likely to close the gap back to the triggers, and it did. And then Cheetah, weak top because the triggers got through. Do you notice that the mid band and support held? And the gap theory supported that they might hold? There are some people that take a close on the right side of the triggers to close the gap. And this is just patterns. But once you start talking to yourself in terms of advantages, what happens is it keeps you out of a lot of trouble and it gets you into some pretty good stuff. So, do I have momentum right now on crude oil? No. Do I have a clear path? No. Where's my entry? How do I get into this trade? It's no trade. And it really is that easy. I make it sound like it's that easy. What's the other side of it? It says up, I want to go up. I think I have momentum up. Gosh, that was an area inside a trigger. Son of a gun, what am I missing? And your brain will go towards what you want to see for an entry. Your brain will go towards whatever gets you into the market. Yeah. But I've got 3 divergences in the same price range. I have no triggers through resistance. There may be a long trade, right? For some people. But I think most people say, I need it to break a little bit. I just want it to get above this trouble area before I risk my money. And everybody's different, guys. Everybody has different pain tolerances. Some people will trade into every line and get lucky. Some people will just say, I'll never trade into a line. Some people say, I'll trade into a line if. You'll figure out your groove. You'll figure out what makes you happy. Trading's all about repetition. The market doesn't care. For you guys that have TradingView, every time you close TradingView, I think it's funny. So if I close it, They usually give you a message. And my favorite message from TradingView was the market doesn't care about your position. there is so much truth in that. The market doesn't care about your position. The market couldn't care less about your position. The market doesn't care if you wish it would go up or you want it to go down. Red eye, there's a couple different things that can do that. What time frame is your computer set to? What time does your computer say it is right now? Does it say 11:46 a.m.? Nope. So you're in Central Time Zone. So my computer is set to Eastern because that's where the Nexgen servers are, and I want to be consistent with John Novak, which means that my midnight red eye is different than your midnight, which means that when my software begins to calculate fibs, it calculates an hour before yours. So everything that happens in that hour goes into my equations for fibs. So if we're in different time zones on our computers, we will have different fibs more often than not. I put mine on Eastern. You can choose not to. There's people on the Pacific side that just won't do it. I had a young lady in Europe, and her computer is set to Eastern time so that she could be consistent with fibs with us. Cool. So if you do that, it will violate your software. I want you to do me a favor. You can do it, violate, and then get with Jason. Or you can send Jason a message in tech and go, hey, Jason, I want to change my time zone, and I think Mark said it's going to crash my system. Don't blame it on me completely in case I'm wrong, because I'll get a message from him reminding me that I'm not a tech guy. But when I changed mine, it violated my software. It's just a security measure to make sure you're not passing out indicators and stuff to your buddies. You're welcome. What do you think, guys? Is resistance going to break? Or is it going to hold? What's the magic 8 ball say? Nanda says it's going to hold. It has the potential to, right? Because all the triggers are below. So support has the potential to hold as well. We're in another one of those silly little ranges. Maybe, Morgan. I don't even know what a VPN is. I have no idea what a VPN is. This is a close on the wrong side of the smalls, correct? Want to make sure I got this. So if you were short, Muser, that reversal bar right there is your close. Oh, virtual. Thanks, Wayne. All my tech guys coming in. I like it. So that would be, if I was in a short trade and my exit condition said I will get out with a loss of momentum, I'll get out with a close on the wrong side of the triggers, that's absolutely it. But what is it as well? So guys, don't confuse. One of the things that happens, oh look at that, resistance held, I'll be darned. So when you see stuff like this, and let me see if I can find a good example of it. So this is a better example right here, Muser. Let's say I took this momentum trade right here, and this one fit it 100%. That's a momentum trade. Right here, I could say, all right, I'll exit my momentum trade because of the close on the wrong side of the triggers. And then your brain may shut off and that's the end of it. What my brain says is, if this momentum trade fails, do I have an opportunity to take a high probability trend trade? So there's two potentials. Some people will exit with a loss of momentum, make a couple ticks, and then take the trend trade. Some people will hold their position and say, I've got a trend trade coming. I'll just add on, because with this look, the potential's to go down to the fib. But that's a pretty cool lesson. As long as we don't close on the other side of the triggers, it's going down. As long as we don't close on the other side of the triggers, it's going up. Pretty neat, right? Great management lesson. Every trade is not my trade. Momentum is up. The path isn't clear. Price may return here. Price may return here. These triggers are more than a full bar away, guys. The pattern is price is likely to close the gap back to those triggers, and it becomes even more potentially because we're coming from a weak bottom. Let's see if it happens. Oh my gosh. Like it was meant to be. You see it, Cheetah? Bad bottom, right to the mid band, large triggers don't follow. Guys, no trades in this range. That's the gap theory. I love it. Love it. Once you get good at these patterns, you're floored at the decisions you used to make. And here, full admission of guilt. I used to go long right here and get slaughtered every time. And then I would go long right here and get slaughtered every time. And then I studied this pattern right here, the gap theory. And I said, you know what? Getting slaughtered on these trades is getting old. So my brother taught me the gap theory, and I thought, that's pretty cool. I said, let me go take 75 pictures of gap theory. And I started filling up my spreadsheet with it. And it's not that I go back and study all 50 pictures every day to get good at it. But what happens, let's find one. Mid-band is a termination. That's what the gap theory shows me. Well, and that was somebody else's picture. So the pictures that I take, let's see if I can find one. And of course, I don't have any that are written. There we go. Bad top, gap theory, 50-50, higher probability from a strong top or bottom. Don't fight the gap theory. So what happens is I take the time to write these things out. And when I take the time to write these things out, that's what helps commit it to memory, guys. So that's why taking pictures is so powerful. That's why making sure that you annotate your pictures is so powerful, because you don't even realize it, but you're creating a connection between the visual and what it means to you. And look at that. It is stuck right at that large trigger. Just pause. It's in the same place we left it. So guys, it's all patterns. Everything that